Hello, hello, hello. Is anybody there? Hello, hello, hello.
Good evening, everyone. Good
Hi,
evening, Mr.
Hadis, how are you?
Good evening.
Great, thanks.
Well, it's Monday again already. I don't know where the time is going, but nevertheless, we have to keep moving with it. Hope everybody is fine. After that FIFO LIFO thing last week. All right, let me see who is here first of all before getting further. By the way, which week are we in, anyone? This is week number what?
This week number 12, eh?
That's right, which means that after next week, you guys should be all ready to do your final exams and have some fun. By the way, our class next week, is that a holiday?
No,
The holiday is the week after.
the following week is a Monday, the day we're supposed to take our exam. Remember, you said we take it on Tuesday.
Oh, so you guys still are we still on for Tuesday? Or you want to take it on Monday? Which what do you want? Let's take a vote. Tuesday or Monday?
Which Monday?
The last day of class. Which date is that? Week after next.
That's a holiday. The 18th?
Yeah?
Well, no, Tuesday.
Okay, Danya says a holiday. I don't do stuff on holidays. All right, anybody else agrees with Danya? Any Mondays?
I agree. I agree with Dania.
Okay. I see where this is going.
Sorry, what did Danya say?
Monday's a holiday, Tuesday.
Yeah, okay.
All right. Tuesday, which date is that? Anyone?
The 19th?
Tuesday the 19th. Okay, Monday is a holiday. And nobody wants to do anything on the holiday, especially write an exam. However, luckily for you guys, you have the whole holiday weekend to study and practice. How's that? Don't plan any weekend trips. Don't plan any fun until after your final exam. Then you can go and do whatever you want. All right. Vanessa. No Vanessa. So we're in week number 12. Hopefully you guys have been studying. Did everybody send me the homework that I assigned?
Yes.
Wonderful. Great. I've had one or two bits of feedback from persons who had some blah, 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 and they got them sorted out, which was good. That's the whole idea. All right. Hadith, of course, is here. Here in week number 12 and kicking. All right, Clinton. Clinton is somewhere. Mario.
Present.
Hey, there you are. Living color, yes. Week number 12. How quickly time flies. Daniel, no Monday holiday exam rule.
Hi.
Hi, Daniel. I want you to know that you're responsible for swinging the parliament's vote in your favor. How does that make you feel?
I mean, as long as you don't have an exam on a holiday, I'm fine.
Okay, Crystal. Crystal, as in crystal glass. Okay, Crystal is somewhere making coffee. Blaine,
Good night.
hi Blaine, how are you?
I'm good and yourself.
Fine, just fine. Were you here last week, Blaine?
No, sir.
I know, I thought I missed you. Okay, so welcome back. This is a good time to be in because we only have today and next week to finish up, to answer any questions you might have, to gripe about anything before your final exam. Okay, so these 2 sessions are good sessions to be in. Denise. Denise. Oh, is somewhere. Okay. Veronique. I haven't seen Veronique in a while. Okay, and Chanel. No Chanel. Okay. All right, any questions before we get started or continue on with today's blah, blah, blah? No, no questions. Okay, not a problem. You can jump in anytime. Let me just share my screen for those who want to follow. With me. All right, there we go. Does anybody remember which of the inventory costing methods we discussed last time? What did we end the class on? Was it periodic or perpetual? Anybody remembers which one it was? Did we do perpetual? Must be my mic. Can anybody hear me? Can anybody hear me now?
Hey, Mr. Wilkinson, we can hear you.
Yeah, we get.
Okay, for a minute I thought that the rapture had come and then I realized it couldn't have because I'm still here. Okay, did we discuss the perpetual system last time? Inventory cost?
I don't think we did. I'm not sure.
Okay,
Where we ended, I don't think so. I don't know if anybody else.
anybody else remembers whether we discussed the perpetual system, the one I'm showing you?
I think we did.
Yes, we did, actually. In fact, somebody actually said, man, I prefer the other one rather than this one. And then
Mm.
somebody said, I prefer this one rather than the other one. And so I'm saying, what's the difference between the 2 methods? Anybody remembers? The difference lies in determining ending inventory. What do I mean? What happens in the perpetual system anyway? Does anybody remember how perpetual works, period, outside of the inventory cost? What did we say? Like, for example, if I ask you that week after next Tuesday, like, how does the perpetual system work? What would you say?
Inventory is recorded as goods are sold.
Exactly. Inventory is recorded as going out of
Mhm.
inventory as you sell products each time automatically.
Yeah,
Go into the store and the machine, the cashier cashes up 3 pairs of shoes, and under perpetual system, 3 pairs of shoes would come out of the inventory account automatically.
yeah,
Under periodic, it doesn't work that way. When you
no,
buy the shoes, you just record the sale and you don't account for any inventory issues until when?
the end of the period or the end of the year.
Of the period at the end of the year. Okay? Nice little thing to know. So if you're looking on my screen at page 367, right to the bottom, which method is this, by the way? The one we're looking at on my screen.
Specific identification.
How do you know?
It says it.
It says it, yes. Isn't the obvious hell? Watch out for the obvious. The obvious will get you every single time. It says so. Okay? Now, specific ID, whether it's perpetual or periodic, is supposed to be the easiest of all because, especially in an academic environment, they are identified. All you need to do is line them up. Okay? For sure. Now, on the bottom of page 368, sorry, 367, is that some kind of calculation of inventory or is that just data? Is that some calculation of perpetual or periodic? Or that's just
That's
data?
just the data.
Yeah, that's just the data. And it's important to separate and know when it's just data and then it's data for you to use. A lot of times students start thinking data is for some reason some other animal. Okay, this is just the information that you're working with in order, in this case, to determine inventory cost under the perpetual system. All right, so at the beginning of April, we have 160 units brought over from the end of May. How many purchases did we make in the month?
That's 31 purchases.
31 purchases? How did you?
Yeah, I mean, sorry. How many units you're saying? 840 units?
Aha. Okay, Hadith, you fell into my trap and I'm glad you did so I can
Oh,
explain.
wow. Next time I won't answer then.
No, that's not the real purpose. Okay.
I know.
So here's what I said. How many purchases were made during the month? Not how many units were purchased. How many purchases were made?
Oh, 2 purchases were made.
Absolutely. What am I getting at? Watch out for the language.
Yes, I got you.
Get stuck all the time in the real world, even at work, at school, at wherever you are. Arguments break out because people misunderstand the language. Watch out for the language, okay? It'll sometimes be the difference between getting it right, getting it wrong, or getting into a fight or not. Like, oh, I thought you say my ma this. And he said, no, I didn't say that. I said something completely different. Okay, but they misunderstand because of the language. All right, so yeah, how many units were purchased during the month?
That's 840.
Yeah, 840. How many were sold?
560.
And therefore, at the end of April, how many would be left?
The inventory at the end of April was 440 according to the data.
Without the data. If you
Oh, without
if you purchase 840 and sell 560,
280?
what do you have left?
280.
Is it 280?
Mhm.
Okay. You sure?
Yeah, if it's 840 and you minus 560 from that leaves 280.
That's what I want you to say. I want you to say, of course I'm sure. See, like that. Don't mix me up. Sure. So that when you get into the examination, you don't second guess yourself and change your answer. Remember the other thing about inventory costing It's designed to determine two important things at the end of the period. One, ending inventory cost, and two, the cost of goods sold. And so you need to make sure you can determine those two things whenever you're doing inventory costing, whether it's FIFO or LIFO. Okay? So, just as a brief review, perpetual, because we already beat periodic to death, and perpetual, but some people seem a little stuck still on perpetual. So let's look at the average cost method and the perpetual. Any rules? Any rules that we should follow for average costing and the perpetual?
And
Nope.
average is computed after each purchase. Well, that's it.
Okay, so let's see if that's true. On April 1st, we had 160 units at $10, okay? And then on the 6th, we purchased how many units?
440
Or 40 at what cost?
at $12.50.
For a total dollar value of?
5,500.
Exactly. And so following the rule, after each purchase, you should calculate a what?
Balance,
Average price.
average price, yeah.
How do we do that? How do we get the 1183 here? How do we get the $11.83 average?
Oh, come on, guys.
Uh-huh. Well, first of all, how many goods do we have available on April the 6th? How many units do we have available then? Units, since you like units. Units can be goods. They are goods. How many units do we have as at April 6th?
600 units.
600 units. At what cost? Dollar value total. $600 unit at what total cost?
7,100.
$1,100. So if
You
we want,
divide 7,100 by 600,
and that gives us what?
$11.83, the average.
Yes. So the rule follows through. If you remember the rule, you wouldn't have any problems with weighted average. If you don't remember the rules for some reason, like I don't like rules, the hell with them, I'm not learning that, then you're not going to do well if you get a question on weighted average. Okay. All right. So then if the new price is 1183 on the 10th of April, how many units did we sell?
560 units.
At what cost? At what cost? At what total dollar value?
Where's everyone tonight?
I'm sorry, where are we? I'm so sorry. Good evening. I had to step away. Sorry about that. What page are we on?
We are on the bottom of page.
There's 275 in Apple.
Yeah,
Okay, my apologies.
and I have it on the screen as well.
Okay, right. Okay, so this is the perpetual system. Okay,
Yeah,
average cost. Okay, sorry.
we just worked out the first average cost on April the 6th to be $11.83. And then we went down to April the 10th, where we said there was a sale of 560 units. And my question was, at what dollar amount was that sold? What cost?
At 1183.
1183, yeah.
Yeah, per unit, but I mean, what's the total dollar
Or
value?
6,625.
Yeah, okay. Now, remember, and a lot of students don't remember,
Yeah.
under the perpetual system, whenever we make a sale, we have to make 2 entries, correct?
Yes.
One is the sales entry, debit cash, credit sales. The other one is the entry in inventory. Debit cost of goods sold for the cost price, which is what we're looking at now, and credit. What do we credit?
Merchandise inventory.
Merchandise inventory.
Absolutely. Thank you very much. This is not lost on some people. All right. That means for some of us, we've gotten this crazy thing. And for others, we probably won't get it until accounting too. Okay.
That is accurate, Mr. Wilkinson, unfortunately. I'm just being real.
It happens all the time. It's interesting how that works so each time. So how many units do we have left after the sale on the 10th?
40.
40,
At what cost?
475.
Yes, we're still using the same average. Why? Why are we still using the same average price per unit?
Because we didn't have a sale.
Not sale.
We didn't have a purchase.
Purchase.
Yeah, we didn't have a purchase. Okay. Now on the 25th, what happened?
We
We
made
made
the
a purchase.
purchase.
Yep, 400 units, but it's not at 1183 anymore. It's at the price of the 400 units, which is $14. Now, once we make the purchase, then at the end of the month, we can then determine the cost of the ending inventory using what unit price?
Repeat that again.
At the end of April, how
Mhm.
many units do we have in ending inventory?
We have
440.
440.
At what cost?
At
6,075.
5,
At what unit price?
1381.
How did we get the 1381? And why did we get?
1,000.
6,075 into the 440 unit.
Mhm.
Okay, and why did we do that? Why did we do that calculation?
Because we needed to find out the average cost of the ending inventory.
Exactly.
And what's the rule after each purchase?
The rule after each purchase is you have to calculate the average.
Calculate a new average
Average
cost.
cost. Mhm.
Don't, your answer will be wrong no matter how well it's written down. Okay,
Let me write this down. Average cost after each purchase.
So basically, the average cost method is after each purchase. And then I think you said something about
The
the
sale.
sale is
Uh-huh.
always equivalent. Even if you have 2 or 3 sales, they're always equivalent to the cost of goods sold in this
Yes.
map.
To the
Yeah.
cost of goods sold, right? Okay.
Uh-huh.
yeah, the sales amount is always equal to the cost of goods sold. Because remember, inside inventory, when we sell something, what are we doing? Are we increasing or decreasing inventory?
Increase. I mean, decreasing inventory when you sell.
Yes, and whenever we sell the goods, we have to account for what they cost.
Yes.
So the sale in this example, and in any inventory example, the sale is always equal to cost of goods sold for obvious reasons.
So, Mr. Wilkinson,
Yes,
if, for an example, after the 25th, we had another sale, right?
right?
Which sale would you calculate your new cost of goods sold at? Would it be the last set of sale, not an overall collection of sales?
If you had another sale, then you have to calculate it using the correct average price cost, and then you add the two together.
So that's all sales within the period.
Indeed.
Mhm.
Okay, so I get it. Because if we're looking at just the 10, that's only 6,625. But if we were to add another transaction after the 25th, let's just say a sale of 10 units, then we would say add whatever the unit cost is to the transactions on the 10th to give us a new,
Cost of goods.
you understand, because things are done tricky, exam, hint, hint.
Right.
And so I would just want to know the process here.
No, that's correct. If another sale occurs, then you calculate whatever the total cost of the sale is, and then you add the two of them together because you had one on the 10th and then one on the
Thank you.
25th.
Perfect.
The fact that you answered the question means that this thing is a little clearer even then, yet before yesterday.
Yeah, with this method, I must agree. The other one, that one is coming from Satan. I don't know.
Which one that is, Krista?
The periodic system, I so don't like that.
I don't know, yeah. She doesn't like periodic, even
I
though periodic is supposed to
Stand it.
be easier or pretty much the same. For some reason, she has an issue.
Mhm.
So remember the rules for weighted average. You only calculate the new average after each purchase. And also sale is equal to cost of goods sold for obvious reason, because whenever you sell something on the inventory side, it's cost of goods sold. Simple. Okay. Now, if you look at this weighted average, and I were to say, what is the ending inventory under the weighted average method? What is the ending inventory cost?
Under the weighted average method.
The one we're looking at. What is the ending inventory cost?
The 6,075?
Of course.
Yeah.
It took you guys a little while for some reason.
I was trying, Mr. Wilkinson, sometimes when you ask these questions, it's like you asking a whole new different question, but it's really the same question, just asked differently. Which tricks
Exactly.
us.
Which is what examiners do all the time. If you know that you know. Examiners often ask the same question in different ways. It's 6 or half a dozen. And you're like, really now? Okay. So yeah, beware. Sometimes examiners use different words, like synonyms that mean the same thing. But if you don't know the synonym for it, then you know the answer, but you just don't know the synonym. That it means the same as the other one that you do know. All right. And this is where a word log becomes important and reading becomes important. So if there are any synonyms, you'll pick them up along the way. And so if the examiner raises it using another word that means the same thing, you don't get stuck like, oh, that's sick, I knew that, I just didn't know what that word meant. Okay, and happens all the time. Okay, happens all the time. Okay, so cost of goods sold is 6,625. Ending inventory is 6,075. All right, on the weighted average. Okay, so we're pros now. We can go down to FIFO and just breeze through, no? Any rules for FIFO, or they're just the same as on the periodic?
Definitely the same.
No?
I mean, the same in that your cost of units, I guess, after sale would be equivalent to your cost of goods sold.
Well, sale is still equal. Sale still equal.
Sale is still right.
Mhm.
That's the only comparison I would make, but we still doing first in, first out, right?
Right. So when we sold 560 units on the 10th of April under FIFO, which units did we sell first?
How many did you
160.
sold?
160.
Yeah.
Yeah.
And then how much did we have left?
We have the 440.
No,
Oh, sorry, my bad.
Originally, how much did we sell? Sorry, I missed that.
400.
Yeah, you see, remember, be careful.
Yeah.
We had 160 in inventory and we purchased 440. How much is that? How much is that in total?
600.
600.
And then we sold 560,
Mhm.
right? However, They broke it down so you can see how FIFO works. They didn't say just the 560, otherwise you get mixed up.
Right.
So they break it down so you can see and ask yourself, okay, under FIFO, of the 560 that sold, where did the first 160 come from?
Yeah, it came from the
Right.
starting inventory. Yeah.
Sorry, first,
Yeah,
and
and
then
then the other
balance.
400.
Mhm.
The 400 came from the purchase on April.
Excuse me.
Exactly. And once we account for the total sales, how much is left in inventory?
40
At what cost?
at the 1250, because you know you go and first and
400, you mean, Hadis?
40 is left.
You mean the balance or the sale? What are we talking about?
Balance.
The
Oh,
balance.
sorry, I thought you mean it's the sale. Oh,
Yeah, the balance of
yes, that's
40
correct.
was
440.
And then what happens after the 10th? What happened on the 25th?
Make a purchase for 400
Another
at $14.
Okay, and so therefore our ending inventory becomes 440 units made up of two categories of costs, correct?
Mm-hmm.
Which is
40
Four.
units at 1250 and 400 at 14.
See how simple that is once you follow the rules? You follow the rules for average, weighted average, you can't go wrong. You follow the rules for FIFO, you can't go wrong. If you slip and do anything else that you think you should do, then you'll go wrong. Okay? Sales is still equal to cost of goods sold. For sure. And we know what ending inventory is because we just calculated it. What's the total cost of ending inventory?
6100.
Simple as that. And any question you get for inventory costing, whether it's FIFO, whether it's periodic or perpetual, the question is likely going to ask you at least two of the following questions. Calculate the cost of goods sold and ending inventory.
So
Calculate
what
the cost of goods sold and ending inventory.
question?
Yes.
When we did the average cost method a few moments ago, you had said that we must calculate a new average cost after each purchase.
Right.
With FIFO, is that the same?
No,
No, good.
that is only the rule for weighted average.
Weighted average, good.
Good question. Get that sorted out, get that out of your mind, make sure it's clear. That's a, whether you think that that's a key question or not, it really is, because sometimes students get stuck thinking somehow that it transfers over to FIFO or Lifo. It does not. It only applies to
So
weighted average.
why then with the FIFO on the 10th of April, which is the balance? No, let me go back for it. Let me go back. Sorry, on the 25th, which is the purchase 400 at 14. 400
Right,
units at 14, right?
right.
I guess the question is, I know how they arrived to the $14, but are we supposed, I mean, was this given or was this calculated?
Given, always.
Okay,
And the reason why it's given, because when you go to purchase the stuff, you go to another store, don't you?
Mhm.
And you say, how much for these items? They'll tell you $14 each, see?
Mhm.
And so you don't have to figure it out. That's it. That's what you paid.
Right.
So it'll always be given.
What about the inventory then? The inventory as well, we will have to break that down from after the purchase.
You would.
Or-
You have
okay.
to break it down because if you say 440 units are left, which price are you going to use for the 440 units?
Yeah.
You see what I mean, Krista?
Yep.
Yeah, I guess with this system, just how we have the sale and we had to break out the sale. I guess my question is, how would I know when FIFO kicks in?
Whenever there's a sale,
Right.
whenever there's a sale of any number of units, you have to ask yourself which units were sold first based on FIFO. First in, first out. So you go to the very top of the period, and in this case, 160 units were sold first.
Right, okay.
And then when you run out 160, then you go to the 440 for the rest,
Mhm.
just like in the real world.
Okay,
Absolutely. So if you have a business and you carry over 160 units from the previous period, right? And then you purchase 440 more, and somebody comes and then you sell 560, you have to assume that whatever you purchase first under FIFO is gone first. And then the rest comes out of what you get second, what you purchased afterwards.
right.
That's all. Just follow that sequence. And it's hard to go wrong.
Well, I hope that we, for an example for the exam, to make things easier, because we are relying, at least I am relying a lot on the examples in the book. So I'm hoping that your formatting of it would carry a similar, because then, it's just, I want to be able to get this. And so help us out, Mr. Wilkinson. You know what I mean? I don't know if your format is going to be whereas, oh, you're going to have a question mark here, a question mark there, or you're just going to give us everything and then we calculate it. I don't know, whichever it is. I'm just saying, I just would hope that it carries a similar format.
Whatever it is, it cannot be too different from what we're discussing.
Right.
Okay, now that doesn't mean that every now and then a question may not have a little twist in it that the examiner expects you to know. Like if you have 50 and you sold 30, that somehow you should know you have 20 left. If that doesn't kick in, then dog eat your lunch. But other than things like that, format the format would be pretty much the same, and you just kind of follow the rules. See, follow the rules. And it's hard to go wrong when you follow the rules. So in other words, you're going to get data, and then you're going to get information that shows, no doubt, opening inventory, purchases, and sales, pretty much. And then you'll probably have two minimum questions that will be something like calculate cost of goods sold and calculate ending inventory.
I just hope it's under the perpetual, not the periodic. Just saying.
Well, you know, examiners go. Sometimes
I know.
you give one from one area under FIFO and then one from another under Lifo, just to keep our students interested.
I have a question. I just want to plug something. I just have one question, Mr. Wilkinson, so bear with me. Under the periodic, right?
Right.
The example given on page 269 in our textbook for FIFO confused me, right? I mean, I understand I did the whole studying, but I just wanted a question answered with respect to the example gave the dates, which is April 25th first and April 2nd. Hadith, you could chime in if you like,
Sorry, I didn't even hear. I'm sorry. The copy
On
is-
269, right, in our textbook,
Mhm.
as the example for the periodic system, why did they use April 25th first and April 6th second?
That shouldn't happen. You sure that would happen?
Yeah, it
It's
says
269.
on 269, under the FIFO method, they use April 25th as the first set of units. If I'm not-
Hold on to that thought, Crystal.
Okay.
I'm just going to check the landscape. I'm going to call a name and see what comes running out of the bush, the underbrush. Blaine.
Hi.
Okay, Blaine is there. So you listening to all this crap, Blaine?
Yes, sir.
Okay, very good. Just want to make sure that you're there listening. Remember, if you have any questions or concerns, do not be bashful. Do not mind Hadith and Crystal. They don't care. They just let it rip. And that's what you're supposed to do. Okay, Blaine? Don't just sit there like, man, I should ask, but I'm supposed to ask the wrong thing. To hell with the wrong thing. We wouldn't have electricity if the guy who created electricity didn't fail hundreds of times, right? Blaine?
Yes.
All right, on it. Okay, Crystal.
Yeah, so I just need you to explain that, or anyone, I guess, if you can explain that.
So we have in the example, April the 25th, followed by April the 6th,
Yes.
followed by which date?
There's no other transactions. They were using, under the Fifo system, they gave an illustration from the periodic system, and then they broke it down. But because I was following, and I know I'm supposed to follow the Fifo method, when I read it, I was like, but why are they using April 25th as the first line item?
What happened on April 25th?
Okay, well, the order came as, first of all, the summary, April 1st was the inventory, the 6th was the first purchase, and the 25th
Okay.
was the second.
Now we're getting warm. Okay. On April 1st, we have opening inventory.
Mm-hmm,
How many units?
160
At what cost?
at $10, $1,600.
Okay, now notice I'm dragging you through the mud, that same mud that we were in earlier for a
Mhm.
reason. So after the first, what happened next?
We made a purchase on the 6th at 440 units, 440 units at $1,250.
Okay, so after the purchase, what happened?
We made another purchase of 400 units at $14.
Any more purchases?
No,
So the second purchase was made on what date?
the second purchase was on the 25th,
Okay, and the first purchase is when?
the 6th.
Okay, so after the second purchase, how many goods did you have available to sell?
After the second purchase, I had 400 units left
No, not left. Available to sell.
to sell.
Yeah.
Oh.
See what I mean by changing the language but meaning the same thing? Here's what I mean.
600. Mhm.
April the 1st, you had opening inventory of how much?
Right, I had 600 to sell. I have 160 at first, and then the 440 is my first purchase.
And what's your second purchase?
400.
So how many did you have available to sell altogether?
Well, I have 1,000 units.
Altogether, how did you get 1,000?
Well, because I've added all of the units together.
That's what I mean when I say how many goods do you have available to sell.
Okay,
In accounting, that also means cost of goods available for sale.
okay, my
But if
bad.
you don't know the two expressions, depending on which one I ask, you'll know what to do, but you wouldn't be sure because you don't understand the one I asked.
Agree.
Okay, so you're right, it's 1,000 units
Yeah,
available for sale
yes,
as at April 25th.
yes.
And then what happened?
And I made a sale, 560 units.
On which date?
There's no dates for the sale.
No date for the sale? What the hell kind of transaction is that?
I need you to probably pull it up. I don't, it's just,
Page are
it's,
we on?
No date for the sale? There has to be a date. They just didn't put one?
no, that's how they have it broken down, April 1st, 6th, 25th, under that, 1,000 to sell. And then minus the sales at 560 unit to give you an ending inventory of on April 30th at 440 units.
Okay, so that's pretty consistent what we did. Where's the problem? I mean,
I'm asking for FIFO method though, on the example given, why did the textbook use 400 units at $14 as the first line item, which was purchased on April 25th? Am I not getting something? Because I
okay.
thought FIFO
So-
was the
Okay, so how many goods did you have available for sale?
1,000,
Good. And how many units were sold?
560.
560. Where did the first set of units come from?
Inventory.
The 160.
Mm-hmm.
And so how much you have left that was sold? 400?
For at the ending,
No, you sold 560.
yeah, sorry. And I
160,
still have 440 left.
440?
Mm-hmm.
You sold 560,
Yes, sir.
and if you take 160 from 560, how much is that?
160 from 560, that's $400, 400, not $400, but 400 units.
So why did you say 440?
That's my ending. I was
Oh,
saying,
no, we're not at the end yet.
right, I thought you were
After
asking for ending.
after you accounted for the 160, you had 400 left.
Mm-hmm.
Where did that 400 come from to sell?
It came from your, after you had your sale or your goods available to sale or to sell, you then sold 560. That came from there.
I see. You're still getting stuck. Your opening inventory was 160.
Yes,
How much was your first purchase?
440.
So the 400 that you had left from the 560 came from your first purchase. First in, first out.
But why they using April 25th? That's why I'm confused, I guess. I mean, I know how they got it, but why are they starting with April 25th?
What happened on April 25th?
My second purchase was made.
On April 25th.
Yeah, like that's,
Okay.
I'm trying to say, why not use the 6th first as opposed to the 25th? We know the first in, I'm just confused with that. I understand how they got it, but why are they using April 25th?
What happened on the 6th?
440 units was purchased.
Okay. So, like, what's the problem then? On the 1st, you had beginning inventory. On the 6th, you bought 440. And on the 25th, you bought how many?
400,
For a total of how much?
440. I'm
160 plus 160 plus 440 plus 400.
No, I want 1,000 units. I get all of that, Wilkinson. I'm not
Which
disputing
is,
how I get it. My
think
whole thing
that-
is you are explaining to me what I already know, and I'm not trying to be impatient. I'm only saying to you,
Mhm.
what I'm explaining is the example is giving me the dates in the, to me, in the oldest, which is the 25th purchase,
I see what
as
you're.
my first purchase, when it's not my first purchase.
Yeah,
It's my second purchase.
I see what you're saying. Let me just see if I could help you out a bit, Crystal.
I just want clarity on
What
that.
what she is saying is, we're not looking at the data, Mr. Wilkinson.
Right, we're looking
We're
at
going on the
the dates.
data. What she is looking at is the example that they gave for first in, first out method. Using the data, when they were listing, they used, with first in, first out, you go by what was purchased first. So what they did here, an example is, they stated the purchase of 400 units at $14. On
Okay.
April 25th, they listed that first. And what she's saying is that she thought that they should have listed, but she thought that they should have listed the 40 units that was purchased on April 6th first. I don't know if, because I know your book is different from ours.
Yes, that's what I'm saying.
So,
But I do know how to calculate after the 600, how they are derived to the units. That's not my problem. My problem is the chronological aspect of it. If I'm using first in, first out.
Okay, I understand. So let's go back to the transactions. Which month is that?
April, only April.
Okay, April the 1st, we got inventory carried over from the last month, right?
Yeah,
160. What was the next transaction in April?
on the 6th, the 440.
So where's the problem in the sequence, I mean?
well,
There's
under
no
the-
problem in the data. There's no problem in the dollar value. There's a problem in the dates in the order that they were given.
So the data is different from the transactions? That's what you're saying?
Based on me breaking this down, then why didn't I say 400 units?
I don't know. I think they listed that like that, Crystal. I don't know. Mr.
I think they
Wilkinson.
listed that intentionally, right? That's what I'm,
Right,
I
I think you're being confused by how they listed it.
listed
I
it,
think,
yeah.
I think the only thing that they were really trying to calculate is the ending inventory, and it doesn't matter, you can really list it if you look at it.
Yeah,
Yeah.
that's why
Well-
I got confused, to be very honest with you.
That's not like
Let me
they
say,
stole some stuff and, you
listen,
know?
listen carefully now. In accounting, transactions have to be recorded in sequence. So on the 1st of April, we had the opening inventory, and then on the 6th of April, we purchased how many units?
440,
Okay, so that 440 plus 160 equals a total of how much?
600.
600. And then we, again, on the 25th of April, we purchased another 400 units.
Giving you 1,000 to sell total.
And so the date sequence is okay there.
Yes, sir.
Okay, now where did the problem kick in?
Under the FIFO method, the example says 400 units at
Right.
14 from purchase of April 25th.
And then, and the other,
40 units at 12.50 from purchase of April 6th.
right? And then,
That's it. You gave us the 440 units at the cost.
are you looking at FIFO or LIFO?
FIFO.
That's interesting because, okay, I see your point. So they're saying after the 25th purchase, we had 1,000 units available for sale, and then after that, we sold how many units?
I'm looking at LIFO, they said the reverse on LIFO.
I'm asking if you're looking at FIFO or LIFO.
Yeah, I'm saying now I'm looking at FIFO and then I went to LIFO. And it's the opposite. When I say that, it seems as though, unless you could give some clarity there, if I see Crystal's point, it seems as though they listed, Crystal, if you look at LIFO,
I
they-
see that.
you see that? LIFO now,
No,
FIFO
what I-
look like a FIFO to me, but I get what Mr. Wilkerson is saying, but I just want him maybe to pull it up so he can see and understand our dispute instead of,
yeah,
No,
maybe it's, I
no,
just need him to clarify if it's,
I
you know.
understand the dispute. I'm just backing up a little for a reason. After we ended up with 1,000 units available for sale, we sold 560 units, you said.
Yes,
Which day did we sell them on?
there's no dates.
It just said sold 560 units.
Yes.
Interesting. The fact that there's no date is interesting because there should always be a date. Okay. So under FIFO, 160 of that 560 should have come from beginning inventory,
Mm-hmm.
and the other 400 should have come from the the first purchase.
Yeah.
That's not what they did?
we under the periodic system, you know, method. This ain't perpetual, just to make sure,
We end the periodic.
just so he could be clear on what we.
I didn't say periodic.
I know. I'm saying FIFO is FIFO, doesn't matter which method we use. First in is first, first in, first out is the same.
It's just the way they listed it is what, you know, the way they listed it based on the dates. Maybe I'm thinking, because I don't know, maybe that's the way, I don't know. Because the way they listed it for LIFO is the way we would think that they were listed for FIFO and quite the opposite. So I don't know,
It's possible that they may have reversed it in error. That's why I'm asking.
because if you look at the example under first in, first out,
What she's telling me represents LIFO.
yeah,
That's why I'm saying that.
because they used the data, but the dates, April 25th for first in, first out, they listed April 25th units, and then they listed the April 6th and did the opposite.
In other
for-
words, they did last in, first out.
Correct, that's the way it looks.
So
That's
they
what
have-
it-
If they in fact use the 400 units from the 25th, 40 units from the 6th, that's 440 units. Now, does that equal the total amount of units sold?
No, because we sold 560.
Okay, so if you sold 560 and they use 400 from the 25th and 40 from the 6th, then where's the rest of the units that were sold? Where did they come from? They don't say, right?
No,
No. And perhaps the reason why they don't say is because the 440 units does not represent the 560 units that were sold. They probably represent the ending inventory.
now you've gone in a whole new different kettle. So, ah, boy.
Take a pin. After the 25th, well, after they said sold 560 units, what happened next?
Well, yeah, ending inventory, exactly what you said. You have 440 left.
Uh-huh.
But if even if I use my ending inventory as an example, anyway, I see it. But
What I'm saying is the 400 from the 25th and the 40 from the 6th, that represents your ending inventory.
mhm.
Yeah. So there's no confusion because it doesn't relate to the actual sale of goods. It relates to your ending inventory. Your sale of goods. So 560 units that you sold, Crystal,
Mhm.
160 came from the opening inventory,
Mhm.
and the other 400 came from your purchases first in, first out. The first was 160, and the next that came in was 400. And so that leaves 440, 40 from from the 6th and 400 from the 25th for your ending inventory.
I get that, listen, I ain't disputing whatever you say. I'm not disputing that. I just saying I understand you. I get that. I'm just simply saying the example given is confusing. I'm not, if I'm the only one, then hey, but these saw up my point as well with the examples given. I do know how to break that down, but we could, I guess, I'll swallow that and keep going.
Okay, Hadis, you agree with, do you have any alternative opinion?
I'm looking, like I said, I'm looking at what she said, and I didn't see it before she made note of it. And
Remember, I
maybe you
told
could
you- remember
think,
I
I
told
think that
you-
you're talking about something different.
No,
I'm not clear on, it seems like you two are talking about something different.
listen carefully. Sometimes the homework and examinations are going to take the form of the example in the text, but it's not always going to be exactly the same. But the principles will still remain the same. And what I was saying to Crystal is this. On the 1st of April, and if you were to get a piece of paper and write it down, see that's the other thing, that head thing.
Mr. Wilkinson, can I say something? I don't think we're not clear on all of that.
So what
I
is it
think-
not clear on?
I don't think that's the issue with Crystal and we get all of that.
What is the issue?
It's just on the example. I don't know if you could pull it up. Because I
No,
understand
no, I'm looking at it.
you're looking at the example. And so, okay, let me ask you to clarify something for me then.
Okay,
You're looking at the example
right.
and you can just clarify if this is the way we need to do it so we know for the exam. In the periodic inventory FIFO method, they list 400 units at $14. We understand where we get the 400, we understand where the $14 come from. So my question is, are we supposed to, you see where they have April 25th? I just need to know, is that done correctly? That's all, that's my only question. Once you said it's done correctly, then I have no more questions. I just need to know for studying purposes. And when we take the exam, is that stated correctly?
No, what do you mean by done correctly?
Okay, when they list the 400 units at $14 from purchase of $25, cost is $5,600. Is that stated correctly, or should it be 40 units? I'm saying should, or does it really matter? That's my only question. Is it stated on the example that they're giving here now, you based on the data? I just need to know the date of April 25th. Should that be there, or should they have put the information and data for April 6th first. Should it be listed first? Does it really matter? Is it correct?
No,
That's all I
no.
need to know.
No, the way it's stated correctly.
Oh, it's stated correctly. That's all I need to know then. Okay, so
Okay.
it's not an error, Crystal.
So
Yeah.
are you looking at what we're looking at? Not this screen, you know, Mr. Wilkinson. I mean, from the textbook.
Yeah, he said he's looking at it.
So I know.
Oh,
Yeah.
okay. I'm just making sure. Sorry. I just want to make sure because we're looking at the screen, but because it's saying something similar on the screen,
No,
but I'm.
no, I'm not looking at the screen.
Oh, okay.
What I'm saying is that 400 on the 25th, what was the cost of that inventory?
The 5,600,
The unit cost
14,
and the 40 units that were left in inventory from the 6th. What was the cost of that unit cost?
1250.
So the sequence is fine. There's nothing
Okay.
wrong with the sequence.
So Crystal, that isn't something we need to be concerned about. That's how you
No.
listed it, actually.
No.
Yeah.
So
All
you
that
listed
is
like
all
that.
that is saying to you is that the 440 units that are left in inventory, 40 came from the 6th and 400 came from the 25th.
Right, so it isn't,
All that
okay,
is
so
saying.
that clears that up. It isn't stated, it doesn't matter at this point, even though it's first in, first out.
Yeah.
If it isn't a sale, then that doesn't affect, okay, you answered my question, Mr. Wilkinson, thank you so much.
Okay.
You got that now, Crystal?
Yep.
That's what she really
Okay.
wanted, yeah.
I'm glad you got that sorted out, because see, what happens is a lot of times students, when they get down to ending inventory, they start confusing the first in, first out function with ending inventory. All right, all that 440 and 400 units at the end on the 6th and the 25th is saying that once you have sold the 560 using FIFO, what's left is broken down as follows: 400 from the 6th, sorry, 40 from the 6th and 400 from the 25th. No, whether it's first in, first out at that point. All we're saying
Okay.
is based on what's left, we have 40 left from the 6th purchases and 400 left from the 25th.
Okay, okay, I'm clear.
Okay?
Wilkinson, that's after, and another point, I guess, just to muddy it up a bit, now that we're
Right.
clear.
Yeah.
That's
yeah,
your,
yeah.
that's your first set of sale. What if it was a second set of sale?
On which date?
Let's just say, going into a different month now, May.
Well,
So
if
I
you-
have to break it down for 2 months, right?
now if you go into May, you're carrying your ending inventory.
Inventory.
And
Okay.
and you have to carry your inventory into May as $40, 40 units at X dollars and 400 units at X dollars.
Yeah.
That's what will go into May at the beginning.
Hmm.
And then you start the process all over again.
Yeah. Yeah. And then a new system. Okay. Yeah. All
Yeah.
right.
Absolutely. All right. Okay. Got it. Got that out of the way. But it's important.
Thanks,
Because-
Denise. Sorry.
It's important to go through that because everybody interprets it a different way and everybody understands it a different way. And so whatever understanding works for a particular student, that's the way you keep raising it until you get it to your understanding. Never mind anybody else. That's the deal. Okay. All right. And then finally, under perpetual, we have LIFO, which is the opposite of FIFO. Instead of first in, first out, we have last in, first out. Can I just say, well, that's not a problem, keep moving? Does everybody see the difference between LIFO and FIFO, last in versus first in? Okay, let me ask a question to see if you do. At the end of April, how many units were in inventory? On the LIFO, perpetual. Ending inventory?
440.
440 again.
440, sorry.
However,
It's different.
well, the 440 is now made up of two categories from the earliest fee period, not the most recent period. For example, notice we have 40 units at $10. Where did that come from?
Where you is?
I'm right on my page right here in front of you.
Oh, this. Oh, my bad. I thought you were talking about periodic. I was like, where are you? Okay, yes, I get this. We finished with that. Good.
Oh, yeah,
Now we-
I just went there to deal with that 25th.
Yeah, okay. Because I was like, hold on, read this. Okay, let me go back. What page that is again? We'll consent 276 now. Okay,
Yeah, okay.
all right. Go ahead now.
So the ending inventory is again 440 units, but under LIFO, they have we have two different approaches. Why is it that it's 40 units at $10?
40 at 10 after
Because the last end was a sale of 120 units at 10.
10. But then, hold on,
Hold on now.
440
This
and the
is last in,
120.
last out. This last in, first out.
Yeah, last in, what came in last?
Last in, first out.
So what came in, I just looking at this now, what came in last, April 25th,
160.
$14 purchase. On the
400
25th.
units at $14.
No.
Yeah, that came in last.
Okay,
414. Yeah,
yeah, and the balance before that was 40 units at what price?
At
Yeah.
$10.
Okay, now it gets interesting.
Yeah, let me look at this.
40 at 10.
On the 10th of April, we sold
Four,
how many units again? 560 again?
440
Yes,
and the
560 again.
120.
560
Yeah.
on the 10th.
Mhm.
Now, under LIFO, last in, first out, if we sold 440 units first, where did they come from?
The first, it's taking on the first purchase.
Well, what came in last?
You mean by the 10th?
When
As
we
of the
sold
10th?
we sold 440 units
On the 10th,
on the 10th.
Mhm.
What came in last as at that point?
the 440 units purchased on the 6th would have came in last for
Of
$12.
course, of
Right.
course, of course.
That came in last. Oh, yeah.
And then the 120 units that we sold
Came in last.
came from where?
It had to come from the 160. That's what leaves the 40 units. That's why it's at $10.
Exactly. So we have 120 coming from the 160 at $10. We know what happened with the 440. So what do we have left after that transaction?
We have the 40 units.
40 units at $10
Yeah.
for our ending inventory, right?
Correct.
Go back. Hold on. Sorry.
Okay. What part of the highway are you?
It's stuck right there on 95, somewhere there on
I-75.
So it sounds like Crystal is on the bloody turnpike.
Awesome.
Doggone thing.
You know the turnpike is taking you all around the world.
All around, man. You don't get me missing these tokens, man. I get a pay.
Crystal on the turn bloody pike. Let's get her back on the I-95.
Please, man. I-95.
So what part of the turnpike are you on? We can help you from there.
Let's go back to that purchase. That's my last, like you said. This purchase came in last at
Okay.
440 units. 440 units at $12.50.
Okay. Now, how many goods do you have available for sale?
I have 440 units. Right? Oh, okay. My bad.
Crystal, this beginning inventory is gonna be
My
your,
bad. Yeah.
this beginning
600.
inventory is gonna be your death, Crystal.
Man, listen, this better not be.
Okay, stop leaving it out
Yeah.
for some reason. All right, so after this April 6th purchase, how many units do you have available for sale?
600.
Okay. Then on the 10th of April, you sold 440. Last in, first out. What came in last?
The purchase of 440 units.
At what cost?
$12.50.
Good. And then you sold another 120 on the 10th. What came in last after the 440?
The 120.
Came from where? You sold 120, where did it come from?
From the 440, eh?
No, we already sold all of the 440 in the first transaction.
Yeah, so it gotta come from the 160, Crystal.
You see
Oh,
that?
yeah, that's last then, my bad.
Yeah. So if you sell 120 from the 160, how many units you have left?
Yeah, I see 40
At what cost?
at the 10. Yeah, I see now. Okay, go back. I'm back at that.
You
Okay.
on 95 now?
I back on 95. I see it. I was like, come on, y'all lost me. Y'all turning too fast.
All right.
You'll
So
be all
now,
right.
now if you go down to the 10th of April after both sales transactions are completed, the balance in inventory is 40 units at 10. You with us now?
Yeah, I see.
And then what else happened after that?
In another purchase,
Of how many units?
400 units at $14.
Okay, and then the month end rolls around. So
Mhm.
you have ending inventory that comprises those two unit sets.
Yeah, the 440 there. Yep. Okay,
Okay.
get it.
Back on the I-95, safe territory.
Mm.
Remember, all the lunatics are out in the turnpike. Don't go out there. That's if you get murdered and car stolen, bike stolen.
Where Mario them those
I
tonight?
trying to
Mario
figure out
those
where
left
Mario and
where
Clinton.
y'all? I'm just I don't understand.
I understand.
Nobody gone nowhere.
Mario, what's going on with you tonight?
Mario, you had a
was
date.
like,
That's why
Clinton
you
said
ain't
stay away
speaking.
from some girls with
I am
straws.
just listening.
You had a date, Mario.
Listen, Clinton. Listen, Clinton.
Clinton, come through.
Clinton, let me hear your sad story now.
Oh, dear.
story, man.
So where
Why
you was
Clinton
tonight,
and
man?
Mario quiet tonight?
Crystal
I was
on
right
the
there just
window.
listening. I am listening and soaking up as much as I can. That's
What
all.
you mean you soaking? You
Crystal,
soaking up and you know you go to
ask all
school.
the right questions for us and be ready to
Listen.
Boy, you
Mr.
already
Wilkinson, you see how they using me?
Mr. Wilkinson warned you all from the first session. Stay away from them girls in them short skirts.
Them
See,
tight.
you
From the very
Mr.
beginning.
Wilkinson, they all that preaching you do.
I seriously still they fall in these skirts.
It's
Like,
No,
just-
man.
that
it's
message
just-
wasn't even for us, and we remember.
Crystal, ask all the
Place
right
in, place out for 40 units, 160 at
No,
14.
no. We
Let's
were
go,
here.
Mario. You got it, Mario. You got it.
Me and Crystal ain't need to talk no more for the rest of the night. You and
I
Clinton
agree.
pick up on that.
Ain't gonna
Mr.
take that.
Wilkinson, now you gotta back us up now. You go quiet.
No, I'm trying to talk over everybody now. First of all, I understand Clinton is now in class.
Mr. Wilkins, I've been in this class since we see what time we look at the time. From 6:30, I think so.
I know because when I called the roll at 6:15, I didn't get an answer. So now I'm marking you present.
I appreciate that. I know that's a great.
It's a good thing you spoke, otherwise I would not have known. Okay.
Denise say her mic isn't working. Denise is here, her mic isn't working on the chat.
So that's Denise's excuse. I'm just teasing Denise. Okay. So everybody is here. It's just that everybody was listening to Crystal and doggone Hadith.
I agree in
They need to
totality.
talk though, Mr. Bill. How you gonna know they understand if they ain't talk?
My Lord.
Come on now, Clinton and Mario. You all are the leaders in here.
Let me
The men, you know?
put it
Command them.
in Bahamianese. Everybody can know how the thing go come the 19th.
I love
Yeah.
it.
Better
How
make
the
sure
thing
you
go.
prep. Okay. All right. So we only have two things we already discussed last week: the retail method and what's the other method?
Gross margining.
Yeah. What do we use these methods to do again? What did we say last time? What do we use these for?
Estimate the cost of inventory.
Yeah, we have to estimate inventory because something happens like a fire and we don't really know what was lost. We have to estimate it so we can make a claim and hopefully the insurance company will pay. Okay. We went through the gross profit method and the retail method. I encourage you to have a look at it again. And if you're stuck on anything, you know what to do. Raise a question. Doggone it. Okay. So I think we've beaten inventory to death, several deaths actually. So I can pretty much say that you should expect a question on inventory in one form or another, either periodic or perpetual or some interesting academic combination of both. So just make sure you understand all those things we just talked about. If you do and you follow the rules as we discussed them, you cannot go wrong. There will not be any surprises. The only person you can shock is you if you did not and do not know the rules or you apply them incorrectly.
Okay, so boom. Now I have a question.
Okay.
Would we be
Now-
expected? Okay, go ahead.
I have a funny question. Okay, let it rip.
Would we be expected to calculate inventory turnover, or this is something that we calculated before? Because it seems very familiar for some reason.
What made you think of inventory turnover in the first place?
It's in section 3 under management issues related to inventory. I noticed I don't remember speaking about it, but I just want to know, is that something we need to be knowledgeable of going into the exam?
In section 3 of what?
The inventories chapter.
Okay. What did they say about it?
Well, under management issues related to inventory, they kind of just have two broad subjects. One is inventory management with like supply chain management, just-in-time operating environment, so on and so forth. And then there's something that falls under evaluating the level of inventory, and that's where I think calculating the inventory turnover ratio comes in. So I guess essentially I'm asking you this. Do we need to be able to calculate the inventory turnover ratio?
No, I think I gave you guys some ratios the last time, I believe.
Yeah, that's right. Okay.
So
Right.
I won't be giving you
Not
any.
alone, Mario, because all the questions in the world you come and looking for. Wait.
I just want to be certain.
Yeah, Mario picked the most unlikely issue.
I think you need to go back in your hole.
Don't send them back. That's what we
Not
need.
yet,
I
Adine.
just
You need to give.
All right, not yet, because trust me, he looking for extra questions. I ain't.
Serious. He giving milk for all kind of ideas.
But
I
the
just see
inventory
him
ratio,
out
sit down.
there,
Yeah, after all of that, he comes up with an Einstein question with inventory turnover.
You trying to send me past the turnpike. I didn't try to get
Tell
back
him
on.
this inventory chapter, jokers to remember, all these different.
It is a lot to remember, especially for first time people. You guys are gonna have to just keep reviewing and practicing, reviewing and practicing.
That's what I came doing, trying to practice and make
Yeah.
sure.
If you keep doing that and the definitions that are in bold black print, you basically know them, you should be okay. I'm not gonna throw too many curveballs. If you see too many curveballs, you're throwing them for some reason, but I'm not gonna be throwing them. Okay, just prepare properly and as best as you can, and you should be fine. All right. No half dead preparation. That is half dead. Anything does not work. All right. Okay. So chapter 9. I don't know what it is in your text, but in my text, it's cash and receivables. Cash is a very liquid asset. People are always looking to steal it. So therefore, cash has to always be properly managed. Not only be from thieves in the organization, but also to make sure that there's always enough money to pay your bills, just like in your own personal life, cash management. Okay? And there are some interesting definitions. For example, there's a definition for compensating balance. What did they say compensating balance is? Clinton, what is a compensating balance? Right in front of you on my page.
On the balance sheet, cash usually consists of the currency coins on hand, checks and money orders from customers, and deposits and checking and saving accounts. Cash is the most liquid of all assets and the most readily available to pay debts. It's essential to operating cycle because operating transactions eventually use or generate cash. Cash may include a compensating balance, an amount that is not entirely free to be spent.
Okay, keep going.
A compensating balance is a minimum amount that the bank requires for a company to keep in its bank account as a part of the credit granting agreement. Oh yeah, that's like merchant services. Oh yeah.
Yeah. Oh, that sounds familiar to you.
Yeah.
Okay. Keep going to the end. Such an arrangement.
Pardon me?
Keep going.
Okay. A company keeps a company keeps it in its bank account as a part of credit agreement. Such arrangement restricts the cash and affects. It increases the interest on the loan and reduces the company's liquidity. That's like the rate they get. Okay. In effect, it increases the interest on the loan and it reduces the company's liquidity. The Securities and Exchange Commission therefore requires companies to have compensating balances to disclose the amount involved. Most companies.
Okay, that's fine. I
Okay.
just wanted you guys to have an understanding of that unusual word called compensating balance. It's a minimum amount. For example, if you go to the bank to borrow a commercial loan, for example, couple hundred thousand, some millions of dollars even, part of the condition might be you have to keep a minimum balance of $50,000 in the account, whatever they agree for it to be. And the reason why lenders do that is so that companies wouldn't use all the money and end up not having enough money to pay its monthly interest and principal payment to the lender. That minimum balance assures the lender that at least at minimum, there's sufficient there to keep the account open and to keep sufficient money to at least cover monthly principal and interest payments. Okay? Otherwise, some companies will use everything and then run into cash problems, and then the lender has a problem because they cannot get paid. Okay? So that's just to keep borrowers honest. Okay? Compensating balances. That amount of money that you cannot use for your day-to-day operation. All right, accounts receivable. I hope everybody knows what they are. Accounts receivable. When you sell goods and services on credit, you create an accounts receivable because you hope that people will pay you back. Okay? Most people do, some people don't. Some people actually disappear from the face of the earth and don't ever pay anything, which means you have to write it off. Okay? So receivables are great because if you're selling goods on credit, you tend to have more sales because people like to borrow and purchase things on credit using their credit card or any other method. The only problem is when it's time to repay, some people get a little stinky because they don't want to part with their money. Okay? Can somebody look at this chart that I have on my screen, 394, and tell me what they're trying to tell us in this chart? Let me see if anybody still has a thinking cap on left for the evening. What is this chart saying?
So, which industries produce the most amounts, or the significant amounts that are accumulated in accounts receivable because of a particular industry?
In other words, which industry has the largest amount of receivables typically?
Advertising.
Advertising, and the least?
Grocery stores. Wow, that's not fun.
No, because grocery stores typically don't give credit. I don't know what that little bit doing there anyway. Most grocery store transactions are cash. You can't go to any grocery store anywhere in Nassau and say, can I do this on credit? Okay, they will tell you if you don't have cash, get out. When I say cash, I mean cash or cash equivalent. Cash, debit card, credit card, that's cash. If you want to say you're going to pay next week, that's not going to work in the grocery store too often. I don't know where that 5.9% come from. There must be a grocery store and I don't know, must be Switzerland, a nice country where they give groceries on credit, or maybe in Israel to the old Jewish people who are retired and all that. But most times groceries are not sold on credit. Hell no. They're too perishable. Gasoline is usually not sold on credit. Some companies do every now and then, but not too much. Some companies tried selling gasoline on credit to Bahamians many, many years ago, and some of them ended up having to close their doors because people stopped paying. Go to another gas station so they don't have to pay you. And eventually when the gas company comes to pump the gas, you say to the gas company, can I get it on credit? Because I'm waiting to be paid from my customers. And they tell you, no, we don't give credit, cash or nothing. Close up the tank and leave. And so,
may I ask a question?
Certainly.
Well, I was waiting till you're done. But boom, right? So is it a good thing that, can you go back to the table, please?
Okay, that chart.
Yeah.
That's good. I'm happy somebody's fascinated by this chart. I was hoping.
I wish not to be bamboozled by the woman them. But stay on track. Is it, I feel like it's kind of a good and a bad thing that the grocery stores have such little amounts or significant amounts of accounts receivable. And I say that because that means
Mario, I can't wait to hear your argument for this one. Let it rip.
the argument, you know, it's just that I'm thinking about the fact that this means that the advertising people are the most. The advertising industry is an industry that is owed the most money.
Right.
Right? Isn't that what's something that this what do you call it? This data thingy, this chart perceives? Not perceives, but portrays.
That's what it's saying.
Okay, so my thing is this, right? Can you really shoot the grocery? Can you really shoot the grocery stores because it means they're not owed much, but that may not mean that they have as much revenue as advertising people.
Well, again, it depends on the size of the agency and the grocery store. If you have a small agency and a large grocery store, then they're still not going to give you that much on credit because groceries are perishable. And once
Very
people
true.
come home, they forget they have dinner, lunch, breakfast, and everything for that week, and then they forget they owe you money, and they go somewhere else if necessary, so they don't have to pay you. And so all of a
Boom.
sudden, it's you have a difficulty trying to catch people to pay for food stuff. On the other hand, the advertising agency, if it's a significantly medium or large size agency, when you make a certain amount of payments, that can kind of tie them over, get an overdraft or whatever, while they run you down and sue you if you don't pay them and blacklist you and all that stuff. The grocery store doesn't want that headache. They have a
No.
whole lot of stuff that they need to turn over, and they don't want to be running people down for payment because they know very well that once people get groceries, they have a million other grocery stores to go to and never come back to you.
But isn't it the same for the advertising industry?
No, the advertising industry is a little more restricted because they have the facility in place, like credit departments. We go in and say, okay, we're giving you $1 million in credit for this particular transaction. Great, sign this document, give us collateral. See, assign them to us, stuff like that. So they actually have a credit area, so they could tie you up.
Yeah, they get a little bit of cushion.
Yeah, a lot of cushion sometimes. But the grocery store don't have time for that garbage. They're just too busy buying, selling food.
Yeah.
They don't have no time, no setting up no credit department, running people down for money for chicken wings and all that. That people have already eaten.
All right, that's it for now.
Okay, so yes, same thing with the people who sell gasoline. Once people have gas and they can't drive off, the hell with you. That's how a lot of people are. Even your own family members who borrow money from you don't want to pay you back next week because they don't want to part with their money just because they don't want to part with it, even though they owe it to you. And they swore the week before that they'll pay you. And some of them walk around with the money in their pocket, wouldn't give it to you. And they'd hear you say you dared break and still wouldn't give you your own money they owe you. Welcome to the world of receivables. You want to do it, but you better be careful who you give credit to. Simple as that. Okay, that's the key. Be careful who you give credit to. Okay. All right. So have fun reading up this stuff on receivables. We all know what that is. It's simply giving credit so the folks can get stuff now and pay later. Okay. Then we have some other nice words on my page, like contingent liability, which is a potential liability. It hasn't come about yet, but it could come about. It's not real yet, but it could become real. So nobody's suing you yet, but there's a possibility you could be sued if something goes wrong. Those are in accounting, we refer to them as contingent. They could happen, but they haven't happened. Okay. Securitization has to do with getting collateral within a particular entity so that you can secure any kinds of transactions that you're dealing with. Okay. In other words, they said that for a company to generate cash from its receivables is through a process called securitization. And then they go on to describe how securitization works. Anybody read that? Is that in your text?
I did, but I feel like I should read it again.
Yeah, it's not something that's gonna make a difference between life and death, A and B, but it's just there as a matter of interest, securitization. All right. Okay. Unfortunately, I can't read for you. You have to do that all on your very own. That's the part of academics that's personal and boring sometimes, but nobody can do it for you. It's like dying. Like nobody can volunteer to die for you. Well, sort of. Okay. Again, we're back to ethics. Ethics is everywhere, doing what is right. And how does ethics affect receivables? Simple. They show up in what we call an account called uncollectible accounts or bad debts. What kind of account is that, anyone? Uncollectible or bad debts? They mean the
I think we
same.
discussed this.
Sorry?
I know you ended on when you said in a receivable, a company would have to write it off or something.
Correct. An uncollectible account is an account where the customer does not pay at all or in part. Can't find them, they disappeared. You look everywhere under the rock, you can't find them, and so you have to write it off. Okay. Those accounts that we have to write off, we refer to them as uncollectible accounts or bad debts. Okay.
And previously, didn't we go over a way where you can somewhat estimate how much money you can collect, whether it's like 20% of revenue or 30% of total revenue? Or that was like, okay.
Indeed. And this is what companies do every year based on their experiences. They look at what happened the year before and what happened in the current year and make a decision. Okay, next year, how much do we believe we can collect on our receivables based on our history? And they come up with an estimate. And by George, it's only an estimate. But it can be made with some degree of common sense. The kind of estimate you want to make for uncollectibles should not be your gut feeling, even though a lot of people in business still use their gut. I feel that my gut, it's, be careful. Sometimes your gut sends you out in the turnpike somewhere. All right, cash and cash equivalents. Well, we all know what cash is, but what are cash equivalents? Anybody ever heard that? Cash equivalents? What are
I would
cash
assume.
equivalents?
Does that have to do with like securities?
Yeah, anything that can be easily converted to cash. So if you have, like, for example, government stock and shares and all these kinds of things that can be easily converted to cash by selling them, then we call them cash equivalents because they're not cash, but you can kind of sell them real quick in the market and get cash. Okay. So therefore they are referred to as cash equivalents. All right. And of course, these are expressions that people in accounting need to know, and people who are not in accounting need to know. That's the other thing. Accounting is not all about debits and credits, it's about the business of business as well. Okay? So now we get to the interesting part. Not that the other stuff isn't interesting. Seems like this chapter is about reading and remembering what certain things mean. Yeah, especially the stuff in black. I guess that's a hint. All right, cash control methods. How do we control cash to keep it from disappearing or to keep it from being available in the correct amounts that we need? Remember, if you misuse and abuse your cash personally or in the company, when the time comes to pay your bills, you might be found wanting. Maybe some people in here are aware of that. Okay? Companies do the same thing. So how do we control cash? Well, one system of controlling is the impress system, which is the petty cash system. So you set up a petty cash, somebody gets control, keeps the thing locked. And if you need some money for something that is not too expensive, too costly, you go to the petty cash person, they let you sign, and you get the money. That's one way we control cash. We don't just put it in an open tin somewhere and tell everybody whenever you need it, it's over there. We don't do that. Okay. Banking services is another important way to control cash. Making deposits so you don't have money sitting around. Funds transfers, making electronic transfers so you don't have to be walking in anymore necessarily to the bank to make deposits with large amounts of money for somebody to bash you in the head maybe. Okay. So banking service is another important cash control method because with electronic transfers now you don't have to walk around a bunch of money. just like the who that nobody collects it in transit. The hacker maybe, while you're transferring $5 million, they just intercept it.
That's happened?
Of course,
It is happen. It is happen. It is happen.
of course. Don't presume that folks are not out there looking for ways to intercept your money. It does happen. Some
Yeah, but wouldn't they
intercept-
have to know? Like, wouldn't they have to be like watching you like a hawk?
Look, if somebody wants to rape a woman, does he just run up to her? Not normally. What does he do? Watch. See what time she comes in, see what time she leaves. See who's in the house, see who's not in the house. Are
Most of,
there any men
most of
around?
the time is happening by email. Just let's say like somebody requests something, and they pretty much fish that email when they send a request. So when that's why like I think all banks have to do like a two-step verification with documents.
Of course,
That's
Yeah,
that keyword search, man.
yeah.
because that two-step verification makes it very, very, very difficult. And the codes for the two-step changes every time you need it. So it's not constant,
Yeah.
okay? And so therefore it's all, I wouldn't say it's completely impossible, but pretty much impossible. You have to
Far
be,
less likely.
you know what? You have to be the dogs of hacking to get past the two-tier system.
And even when you hack, you still get catch because like with crypto, you got the blockchain. So you just look at the blockchain and you see who's the original.
Yeah, yeah, you can follow the blocks exactly to say, oh, okay, that's where the hell it went. No,
Oh, I thought y'all was finding based off the IP address.
No.
no, not the IP. Not for intercepting funds. No. Okay. So yeah, protecting cash is not an easy issue. But those two that we looked at are two of the more common methods that we try to use so that we don't have to have cash exposed, available, sitting around, things of that nature. Wherever cash is sitting around, it's a temptation for the best of us and the worst of us. Okay. The other control measure for cash is this thing in chapter 9. I guess it's chapter 10 in your textbook, is it?
Chapter 10 is long-term asset.
Okay, so this is chapter what in your text? Cash and cash equivalents.
9.
9 in your text as well?
I think so. Yeah.
Okay.
Actually, this came a bit earlier, bank reconciliation, but we've been over it. I can't pinpoint which chapter it is, but it's there.
Okay, well,
See
we
what
touched on it. We
Questions
probably,
about the cash thing.
yeah, we probably touched on it, but now we have the real McCoy. Okay, cash and cash equivalents is chapter 9 in your text.
I believe so.
That would be interesting if it is.
I believe so.
Check it out. See where cash and cash equivalents are in the index.
When I went to the table of contents, it doesn't have a specific chapter. I wasn't seeing
There's
something.
no chapter called cash and cash equivalents.
No, but the only thing I see is like cash and internal control, and then I'm
Okay,
trying to
go to that chapter. What chapter is that?
chapter 8.
Chapter 8. Okay. Is the bank reconciliation in chapter 8?
I think it is.
Okay, so that's the equivalent. It's 9 in this text, it's 8 in your text.
Yeah.
Okay. All right. So anybody in this class has not heard about a bank reconciliation? Okay, that's good. Bank reconciliation really is reconciling the company's cash account in the general ledger to the company's bank account in the bank to make sure that all the transactions are accounted for. Without a bank reconciliation, people can manipulate the balances and cash movement and run off with money and nobody would know because nobody's checking it by reconciling. The reconciliation is a very critical cash control.
How often are bank reconciliations made?
They should be done monthly.
Oh,
On
that was
average. Monthly.
okay.
Now, if you're a multi-million-dollar company with transactions in the thousands per day, those kinds of companies do reconciliations daily at the end of each day because they can't wait till the bloody end of the month because that leaves too much room for somebody to run off with a whole bunch of money. By the time the month end comes, they're somewhere in Waikiki in a bikini.
That's why you mostly see when people get audited, like the following year, you see somebody get locked up walking by Glen because they take
Or you
So
know,
why do people do audits?
audits are
they,
usually
they,
done
they,
once
they-
a year.
once a year.
Yeah.
And when them orders come around, they go find it, buddy. They go find the 1 cent you take out of this.
But y'all saying doing audits every 3 months is unrealistic?
You could arrange for that if you think you
You
need
get
it.
paid for that, but
If
you
if
get paid account. You get paid
Yeah.
account for that.
Yeah, if you think you need it to control your cash and your other assets, then, and the price is reasonable, then it's worth perhaps doing it, because sometimes regular audits, normally we don't do it quarterly, but I always tell people, certainly clients that I have that I do, whose accounting systems that I review, because sometimes you don't necessarily need an auditor, which gonna charge you a whole bunch of money for a formal audit, unless you're going to borrow a bunch of money, the bank says we need to be audited. Sometimes you just need an accountant to come in, maybe monthly or quarterly, and just look at stuff so that staff knows somebody else other than them are looking. I keep telling clients and potential clients that all the time, but they don't want to pay the extra couple of bucks to this lousy stinking accountant or whatever it is. And say, oh, and then people are stealing from them all the time. They don't even know. So it's always a good idea to have independent person come in, whatever, whether it's monthly, quarterly, or whatever the case might be, to look at some key things and advise if you're management and advise you if you're owner of a business of what's going on, because you don't always know what your staff is doing. And sometimes staff are not doing things that are in your interest as an owner. Sometimes you don't find out until later, too late, or never. Especially the staff figures out that you don't have an accountant checking, and then you don't know what the hell to check for either, because you're too busy doing what you're doing. Okay? It's better to pay a few bucks periodically, a few $100, than to lose thousands or more potentially.
Boy.
A lot of small
Yeah, thank
businesses still don't get that.
So what would you consider a small business?
Depends on the country. In the Bahamas, a small business is a business whose sales are probably between $300,000 to $500,000 a year.
$300,000 to $500,000 a year. Dread, that's small.
Yeah.
So big is like
Anything under that might be considered what we call a micro business, like, really small, like 100,000.
Small, medium enterprise.
Well, some people will consider $300,000 to $500,000 in the Bahamas to be a medium,
Yeah.
and 0 to 300,000 to be small. Okay, so it depends on what criteria and what type of business it is. So theoretically, you could say, okay, between $50,000 to $300,000 might be considered a small business. Between 300,000 or 500,000 and $1 million might be considered a medium-sized building, or 2 million, depending on the type of business, and then anything over 5 million or whatever could be considered large.
So like hotels and stuff would be considered large, eh? Or like XL.
Hotels, yes.
Boy, oh boy.
Okay. Yeah, and then certain hotels I consider mega, but yeah, for sure.
Mega.
Yeah,
This is powerful.
yeah, we have some mega companies like Google and
I would think so.
and those are mega. Okay, for sure.
Bro, imagine controlling the books for like Apple and Amazon and thing. My gosh.
It's a nightmare. But most of that stuff are no doubt done on computers. But even on computers, they still need people with the knowledge and skill to run the computers, put the right information in, help people check it to make sure that people are not manipulating computers and stealing stuff. See? Chances are those kinds of companies have no idea, potentially, how much is being stolen from them, especially the person knows what they're doing.
But I guess in that case, you can't blame Apple for never having sales.
You mean for customers?
Yeah, because like, like how some people have like 70% off, 50% off. I don't think Apple is, I'm not knowledgeable of Apple ever having a sale, like ever. But I guess it's because the employees keep collecting
because
money.
Mario, legit, I was thinking about that today, you know. I legit was thinking about that
Like they never had a
like
single-
midday. And I had my first Apple computer like in 2009, and like from then I never saw them have like a sale. The only thing they'll do is like when they bring us new model, they just down, they just like decrease the price of the actual the most recent after they set the new model out.
Yeah,
legit was
because they pretty much control the market as far as medium to high end products are concerned, and so they don't have to lower themselves, quote unquote, to have any bloody sales. Even
I think
poor
they only have
people.
like a major control in probably like the States. So just like when I went to a conference, one of the guys' his name was Keith Davies, and like he spoke about himself as he is the person who basically built Alive, right? And he was like maybe 20%, or I think he said even as little as 10%, only 10% of Alive users are Apple. Everybody else is Android. I was like, wow, it's a lot.
And the reason for that is they cater to a certain market.
Probably.
The Android market is kind of a middle to low end. Apple is kind of a high end product.
Apple
Okay?
trying to sell as little as possible for the most as possible.
Yeah, Apple is typically above middle to high end product. Androids tend to be more middle end to low end in terms of the market that they serve. Okay, and of course, the amount of persons who are in the income bracket that can afford Androids are significantly large as well. So you have the Android people who are catering to a certain market, and Apple people who are catering to a certain market. And that there is a little crossing over from time to time, but typically each of them have their own niche. And obviously, there are enough people in the world who consider themselves affluent enough to have an Apple phone, and Apple knows it. So it doesn't lower its dignity to have a sale, because in Apple's mind, having a sale might give people the idea that their product is somehow inferior finally, and they can't
scrap
have
it.
some kind of inferiority, or even beginning to look like an Android kind of that department. They can't have that because they sell Apple as a very high-end, sophisticated product, which it is. Okay, for sure.
I wonder what they spend a year on marketing. Jeepers creepers.
Gazillions, potentially. Okay, or maybe not so many gazillions anymore now that they are well known. But I'm sure they still spend a considerable amount of money on marketing. Okay, because most of their marketing now is psychological. To
Very
keep
true.
tied up and to get new followers to join the bandwagon. Okay, Apple users. All right. So this bank reconciliation, companies should do it once a month. Otherwise, people can steal from you. You wouldn't know. Bank people can make a mistake on your account and you wouldn't know. Bank people can steal money off your account and you wouldn't know. Staff members can steal and you wouldn't know. Okay. Bank reconciliation. Control cash. Every month you should do it to make sure that whatever the bank balance is equal to the company's cash balance in the general ledger. If it is not equal after reconciliation, something is wrong. You need to find it, and you need to keep looking until you find it. It could be a normal human error, or it could be a normal human intervention called theft. Okay. So what are some of the components of the bank reconciliation? Well, outstanding checks. Notice what they say. These are checks that the company has issued and reported, but do not yet appear on the bank statement. Why?
Didn't record it yet, I guess. Oh, it hasn't been cleared yet?
Yeah, people have not went to the bank to cash them, right? As long as the checks are not cashed, they're outstanding. So it has already been credited to the company's cash account, but it's not yet been debited to the bank account because they haven't been cashed yet. Everybody see that?
Mhm.
And by the way, where the hell did Crystal and
Yes.
Hadith go?
I'm right here, listening just as
listening.
Mario and Clinton
They listening. Cash shoot them.
So Mario and Clinton, these chicks mean they have another word to say, that you guys have to take over to say something. Okay. What about deposits in transit? What are they?
Money on the truck, on the trucks. Actually, it could be a lot more than
I
that.
guess in a way, but doesn't it or a lot less? Okay. Deposit in transit means that the company has written up a deposit and debited cash, and it hasn't hit the bank account yet. Okay.
Ooh, boom. So watch this, right?
Everybody
So
get
let's
that?
say, oh, sorry. Can I go now?
Yeah.
Okay, so boom. So let's say, right? What do you classify this transaction, right? So has an account in Commonwealth Bank as well as an account in CIBC. They do an intra-bank transfer, and it has left the Commonwealth Bank account and hasn't showed up in the CIBC account yet. What do you call that? Would that be a deposit in transit?
Yes, it would be an
Okay.
electronic deposit in transit. This
Okay.
deposit we're talking about is a physical deposit that you carry into the bank, but you can have an electronic deposit in transit as well, as long as one account is debited and the other account is not credited or vice versa yet. Then it's in transit because it hasn't hit the other account.
Okay.
So if at the end of the day you write up a deposit for $5,000, you will debit cash for the money you receive, and then you'll take it to the bank and put it in the night depository, but it'll be in transit because you haven't yet. The bank hasn't credited to your account. So
Right.
sometimes that deposit in transit generally shows up at the end of the month when you make your last deposit at the end of the month, and your reconciliation is being done before the deposit actually hits your account. Okay, it will show up as a deposit in transit. And then there are some other things. Service charges will show up on the bank, but not in your bank account until you do the reconciliation. Funds that are returned will affect your bank, but not your cash account until you do the reconciliation. And then any debits and credits, miscellaneous, on the bank account will not show up will not be processed to your cash account in the general ledger until you do the bank reconciliation. If you earn any interest from anywhere, investment securities or whatever, and it hits your bank account, you will not debit that to your cash account until you pick it up in the bank reconciliation. I hope I'm making it clear all of a sudden how critical the bank reconciliation is. Am I?
You are.
Because if you don't do it at all, you can see a number of things that can be missed. And if you don't do it properly, you can see the number of things that can be missed, which will, of course, leave your account what? Your cash account, out of balance with the bank. And to some extent, the bank account out of balance with your cash book. It's as simple as that. So let's take that ammunition and look at a sample bank reconciliation for Terry Service Company. Looking at the bank balance for Terry. Anyone? Is this a small, medium, or large company?
What do you guys call it? So it said micro something.
Yeah, well, let's assume micro is one of the three: small, medium, or large.
Small.
Small, clearly. A medium company is not going to have a stinky balance like that, would it?
I would hope not.
No. But for a small business, that's a lot of money.
Yeah, it is.
Understand? If you run a mom and pop shop somewhere, or if you have your own personal business that you do and you have like $1,700 in your bank account, you say, man, this is great. Like those guys who sell coconuts, you see that?
Mm-hmm.
If they have a balance of $1,735 in their bank account, they'll be partying straight through. They'll spend it all, they'll fly to Fort Lauderdale or something. Because to them, that's a lot of money for a small business. See? Imagine, you know how many coconuts you have to cut to get $1,700, anyone?
Oh boy.
A lot of coconuts.
God bless the coconut man.
I wonder where they grow those coconuts. I understand they don't grow them at all. They just
They don't
raise
grow.
people's trees.
Didn't someone get locked up for doing that? Like stealing coconuts or getting cash?
Yeah, that's the common thing. Okay?
Right.
They don't grow their inventory. They just go and yacht people's inventory off the tree. Okay. So this bank reconciliation, then let's take a quick look at it and see how the rules apply. So the balance in the bank is how much?
1,735.53 cents.
Indeed, indeed. And
then-
then what do we add to that bank balance?
$138 because that is the value of a deposit in transit.
Correct. Now, even though we have it showing on the bank reconciliation, that doesn't mean it has hit the bank account yet. But the fact that it hasn't hit the bank account yet doesn't mean we cannot show it as hitting the bank account. Because what we're showing here is whether it's credited to the bank account or not yet, we have to show it as being added to the bank balance because it's already in transit, sent out and deposited, just waiting to be what? Posted.
Boom.
Does everybody get that? So the cash balance at this point is actually 1873. Even though the 138 has not yet been deposited, but it will be because it's already gone.
Indeed.
All right. Now, outstanding checks.
What are these
Check
numbers?
Check numbers.
I didn't know you.
Check numbers.
We say check numbers. All right, well, that makes sense. Yeah.
Yeah, if people don't use checkbooks much anymore, but if you have a checkbook, each set of checkbooks of 20 checks or whatever number of checks are in it have numbers at the top right hand or left hand section, and they're used for control purposes so that you can follow the number of checks that you write in number sequence, or a company can follow the number of checks they write in number sequence. So having check numbers is a control measure as well. So if somebody steals 4 checks to forge, then the number sequence will change by 4 checks. You follow?
Mhm.
So check numbers is a very, very good control system to make sure you keep track of all of the checks. So these are all outstanding checks that were written by the company, but not yet cashed. And so the bank reconciliation for the bank side has to show them as a deduction, because eventually people will come in and do what?
Cash that check.
Cash their checks. So we have to subtract it. So once we account for outstanding check, see, it doesn't matter. We don't need to, they haven't come in yet. Our balance is still 1873. Is that really true?
No.
No, your balance is 1873 minus the checks that they're going to eventually cash.
Boom.
So the true bank balance is what?
1,277.94.
Absolutely. That's how bank reconciliations work.
So boom, right?
Now,
Right.
sorry?
So like you see this 1,277.94 cents. That would be like the company's available balance.
Well,
If that makes
we haven't
sense.
yes. As far as the bank statement is concerned.
Okay.
Okay. As far as the bank statement is concerned, that would be the company's available balance. Okay. Suppose the compensating requirement was $277.94. What balance would be available?
1,000.
There you go. Okay. Excellent. So that's the bank side of the reconciliation. Now we have to do the company cash side to see if they balance. So what is the balance in the company's cash account?
You kind of lost me there. Is it still 1,000? I mean, the available one is 1,277. Oh, you say balance per books? Dread. 1,207.
Yeah,
Okay,
in
so
the general
what-
ledger cash account. In the
What-
general ledger
what-
cash. Uh-huh.
What is the what? In other words, what does balance per books mean?
That means that if you go into your general ledger and click on your cash account, that's what
Huh.
you should see in it.
Okay.
That's what it means. Okay?
Boom.
And question?
Mm-hmm.
No, sorry.
I have a question, Mr.
Yes.
Wilkinson. So we're looking
Mhm.
at this as just a snapshot because I see some verbiage here with respect to to the numbers. Like the number 1 through 7, I guess. I'm just trying to correspond with the dollar values and understand the verbiage if we're planning on having this on the exam, because number 2 confused me on the verbiage here with respect to the outstanding checks, particularly July 14th.
Outstanding checks.
Yeah, because it
Okay.
says here in the book that the bank has not paid for the 5 checks that the company issued in July and August, even though the July 14th check was deducted in the July 30th reconciliation. It must be deducted again in each subsequent month in which it remains outstanding.
Correct.
Can you clarify that?
So, yeah, in other words, every month when you do the bank reconciliation, until that check is cashed,
Mm,
until that check is cashed, you have to show it as being deducted every single month until it's cashed.
okay.
Absolutely. Good point. You picked it out of the August group. Okay, absolutely. And that's very important that you do not miss that particular situation. Because if you miss that check and say, hey, it's August, why do I need July? Because you don't know why it should be there, then of course that $75 is gonna create an imbalance in the reconciliation. And it will not reflect the correct bank balance because you would not be carrying it forward as a deduction, which we have to do until it's actually cashed. And then once it's cashed, we don't have to show it on the rec anymore. That's how we control and know what we have outstanding. Okay, for sure. Because remember, every month when we do the rec, bank rec, we go and tick off all the checks that have been cashed, right?
Yeah.
Yeah, and those that have not been cashed are represented here. That's how it works. Okay? So in the books, then we have 1207, to which we are told we should add notes receivable collected by the bank. Remember when the bank collected it, you wouldn't know that until you do the bank rec, see? And if it's a note receivable, it means you collected money. And if you collected money, then you have to add it to your cash balance of $140. And the other transaction that occurred, interest income. You collected interest income that went into the bank of $10. You have to show that as well in your cash account. And then interest income again, one on the note and one just on the account that you're holding with the bank. All of these are monies that came into the account through the bank, but you wouldn't know that until you do the bank rec. And all of this income that came in for the month, you add them up and you add it to your cash balance in the ledger. All right.
So boom,
So
right?
now, mhm.
Go ahead. Sorry. So like, how do you get the information or the data, I should say, to produce the bank rec? Like, does a banker or an accountant like go through all of the transactions for this account for the month of August? Like, is that how they get all this data?
Well, yeah, and you do classes like this one, for example. If you see where I'm scrolling,
Uh-huh. All this
you
information
notice
now.
I'm scrolling, right?
Mhm.
So what am I scrolling? I'm scrolling back up to the top to show you that there's a standard set of information that you look for when you're doing a bank rec, starting with outstanding checks and what to do with them, deposits in transit and what to do with them, service charges going on the bank account, non-sufficient funds and other transactions, interest income. So that is the kind of raw data information that you have to work with to do the bank rec. And so when you pick up a bank rec, and plus you take that information and you go down to a sample bank rec, like this one that you're learning now. And once
Mhm.
you've gone through that process and been tested and all that stuff, then you will have a basic idea of what you should be looking for to complete a bank rec. So if you are reconciling the bank statement, you know you need what? The deposit at the end of the month. And you
Wow.
also know you need the checks that have not been cashed. Do you see that?
I do. Thank you.
And then, yeah, and that's your data. But I get your question. Because if you didn't ask that question, you wouldn't get that feedback and you'll still be stuck like, where the hell did all this stuff come from?
Yeah, probably so.
Kind of. Yeah, that's exactly right. So now you know the information you need for the bank side. Now you're looking at the information you need for the book side, beginning with the book balance and anything that went into the bank account that now has to be put on the books, like these three income items. And then what do we subtract from the books? Well, we said there was an overstatement of a deposit in August. Why do we subtract an overstatement from the books?
It's throwing the balance off. It's throwing the fair balance off.
Yeah, what it means is if you have an overstatement, then it's incorrectly stated. And so therefore, the bank account has to be reduced by $15, and therefore the cash account has to be reduced by $15. That's all that means. Okay. Collection fee is a charge. So the bank charge you $2.50, then you have to show it as an expense in your books. So an expense is what? Subtracted from your cash. What else is subtracted from your cash? A return check. You go to check, it bumps. That bounce check amount has to be subtracted from your book balance because the check was returned. So your cash balance is going to what? Decrease because of the return checks. No good. You didn't have the money in the bank.
Wilkinson, is that per customer?
You mean
Like for the month? Like if there's 5 customers that are NSF, they have to list all 5 customers like that?
Definitely. Absolutely. So there are 5 return checks, you have to list all 5 of them. Now, some companies put a one total in the bank rec, and then somewhere underneath they put note, and then they list them individually.
Okay.
Okay,
makes
as
sense,
a kind of audit trail. Yeah, but you can put it in the body of the bank rec, or you can put it as a note to the bank rec, either one.
Okay.
Yeah, and then the final thing that would have gone through the bank that you would not have had on your books that you have to take off is the service charge. So when the bank charges you $150 for service charge that month, and you're like, my God, and but you wouldn't know that until you do the bank rec, and that $150 will then have to come off your cash account. Okay, so everything coming into your credit from the bank is added to your cash balance, and everything coming to the as a debit to your bank account is deducted from your cash balance. And if you do that correctly, the adjusted bank balance and the adjusted book balance should be the same. If they are not, you don't know what you're doing, or you did something wrong, or you made a mistake.
Yeah, but the books say you don't usually see the two of these things in balance for the book line.
No, you usually don't see them in balance at the beginning of the bank rec.
But at the end, you most definitely should.
Most definitely.
All right.
Absolutely. Of course, some people who've been around a long time, they've learned to do some tricks. If they do the bank rec and it doesn't balance and they look and they can't find it, they panic or they get creative. Whatever the difference is, they throw it anywhere so it can balance.
Sure.
But that doesn't mean the bank rec is correct. Or somebody might take some money out of the bank account and then put it in the appropriate section of the bank reconciliation so it balances. And sometimes it may never be picked up. That's why the person who makes deposits should not do the bank rec. Do you follow?
Yeah. What is called that? Misrepresentation? Is it correct?
What's that?
Like where they just putting things on it to make it look accurate.
Cooking the books.
Ah, there it is.
Yes. Okay. The cashier should never write up the deposit. The cashier should never write up the deposit and take it to the bank. The cashier should never write up the deposit, take it to the bank, and do the bank rec. You're setting yourself up. Now, if you have an honest Catholic girl who just cannot, she doesn't yield to temptation and all that stuff, then maybe you could have that one person doing everything. But even the Catholic girl might get caught eventually, like, what is this? I need money. And since she does everything, she could fix things and you'd never know, especially if I don't have anybody coming in to check. Or he. I just use she because most of the times we say that only guys steal. Is that true? Only guys steal?
I disagree.
Completely. Okay. Chicks do the same thing guys do. They just do it
Didn't
differently.
we just read about a case where like this lady stole over a period of what, like 15 years or 10 years, stole like hundreds of thousands of dollars from husband?
Yeah.
I think we read about that like the first week or the second week.
Yeah, of course. Stealing is not gender specific. Okay? Anybody can steal. It's not like a male thing. Okay, there are certain things that are not gender specific at all. We just create that aura, and then everybody gets carried away. All right. So that's your bank reconciliation. Grab one and practice it. I think I'll probably assign one just so you can practice, but don't wait for me. Go ahead and grab one and follow your text and practice it. See if you can get it to balance. And if you don't get it to balance, when we come next week, say, you know what? I tried that one, it didn't clicking balance, and I don't know why. Then make a note of where it didn't balance, and let's talk about it. That's usually the best way to do it anyway. Okay? Follow the text, apply it to your question that you choose, the bank record you choose. Please don't choose an easy one. Choose one that in the problem side that's a little more challenging. If you choose one in the exercises, that's not going to challenge you at all. Okay? Choose a medium-sized one from the problem side and give it a shot. See what happens. All right. So now that we understand how important the bank reconciliation as a means of cash control, then we have this little piece here that talks about uncollectible accounts again. And we are told that there are two methods for recording uncollectible accounts. Does anybody know what the two methods are? For recording uncollectible accounts. One is in bold print on this page that I'm looking at.
There goes the obvious again. Direct charge off method and allowance method.
One is called the direct charge off method, and the other one is called the
Allowance method.
Absolutely. So let's look at the allowance method. What is the scenario in this example?
For example, suppose that Sharon Sales Company made most. Sorry, that's not doing it. Anyway, I'll just read it.
Yeah, that's what
For
I was
example,
proposing.
suppose that Sharon Sales Company made most of its sales on credit during its first year of operation, 2011. At the end of the year, accounts receivable amounted to $200,000. On December 31st, 2011, management reviewed the collectible status of the accounts receivable. Approximately 12,000 of the 200,000 of accounts receivable were estimated to be uncollectible. The following adjusting entry would be made on December 31st of that year. What is the percentage?
Well, that's a good question. Why don't you work it out? Let's see. Anybody has a calculator? What's the percentage in this case? They didn't give it. Can you work it?
Divided. 200. Cheapest creepers. The first is at 6%.
You got
6%.
Anybody else
Yeah.
got 6%?
Unless I wrong.
Anybody else got 6%?
6 divided by 200.
I said, man, I don't have a calculator. Remember, you need a calculator for accounting every single class.
Oh, it's 12, not 6. 12 divided by 200. Yeah, 6.
6%.
Powerful.
That's typically around there, 3 to 6%. Did anybody else get 6%? Mario, where'd everybody go?
I don't know. I would hope they're listening.
I'm right here, listening. honey.
Okay,
Hadis and I are here. We're just listening.
okie dokie. So you guys got 6%?
Yeah, I trust Mario. I get it because I calculated, but he got
Yes,
my
Mario. Listen,
got my book.
Mario,
balance it.
Mario, Hadith
listening.
said she actually trusts you.
Isn't this amazing? Wow.
Now, let me tell you a story, Mario. Are you 30 yet, Mario?
No, I'm 21.
21?
What up, Gracie? 21.
I am.
Kiss my foot. I can't even.
Baby.
Exactly right. Jeez.
Baby.
I can't even remember that. Even my baby is older than 21, Mario.
Mario,
Listen,
tell him
I'm
just make
just-
sure with your age right now. Don't mind him.
I'm making my way. That's all I'm doing.
Okay. Well, let me just tell you something for the record. If Hadith tells you she trusts you, that is a compliment. Hadith is a Zuma gal.
Okay, once you
Tell me
know.
something about Zuma gals.
Oh my gosh.
You can't pull too often on them, right, Hadith?
That's right.
And if you do it, you only get to do it how many times?
Once.
Once. Mario,
Powerful. This is some good insight.
get your act.
We have the mini
Okay,
skirt.
so yeah.
We have the Zuma woman.
Yes.
This is good.
So when you go down there to Regatta, get your act together. Remember we told you.
That's right.
If you're gonna get away with it, you don't get away with it once. After that, the judgment. Okay. Okay. So the estimated uncollectible amount is 12,000. Look at the entry that's made every single time under the allowance method. We debit an account call.
Uncollectible accounts expense.
And we credit an account call.
Allowance for uncollectible accounts.
And we write a narrative to say what the entry represents. Remember, as an audit trail, so that 1,000,000 years from now, when Christ returns, he'd be able to read that transaction and know exactly what happened back in 2022.
So I mean, they don't delete the files then.
Well, you can't hide anything from God, and you can delete it. You can't.
Well, concerned. So these account names, they're standards throughout all companies, or they have it like slightly different. Like if I go right now to 3 companies, I will see the account name uncollectible accounts expense. Would it name the same thing?
Yeah, it should be exactly that. Or the only other alternative that you should see is an account called bad debts expense.
Oh, okay, okay.
Okay, one or the other. Now, if you go to
Okay.
China, you might see a funny word for what they're supposed to mean, because Chinese make up their own stuff depending on what they want to do, and other countries. But typically, generally accepted accounting principles, the 2 expressions for the expense here for bad debt would be bad debt expense or uncollectible accounts expense. Okay. All right. So we have our journal entry. We all are professional posters from early in this semester. I don't even discuss posting issues anymore. Anybody who doesn't see how to post a transaction now, dog eat your lunch. Because we've been through quite a few postings over the last couple of weeks. Okay. And notice the allowance for uncollectible accounts. Notice how it's shown on the balance sheet. We show the accounts receivable total minus the 12,000. So we say that the net receivables equals
188,000.
absolutely. And what account is sitting under that?
Thingham?
In the bush, they have no name.
See, you swing me just now. Gotta ask it again.
Oh, which account is sitting under the allowance account?
The allowance account. Oh, inventory? Inventory.
For how much?
112,000.
Is that beginning inventory or ending inventory?
I would hope, and it should be ending.
I hope so. Lifo or Fifo method?
Would it matter?
Yes, but we can't tell by looking at that number, could we?
No, we can't.
But that is the same number that will show up whether you use LIFO or FIFO. Not that number, but that ending inventory amount that we were studying earlier. The same ending inventory when we were doing FIFO, LIFO, and weighted average. See my point? We do
But
all
didn't
of
we
that.
learn that?
No, we do all of that to come to this.
Okay.
All that crap we did in ending inventory, whichever one you choose, whatever your ending inventory is, if you choose weighted, FIFO, or LIFO, whatever your ending inventory works out to be, that is the figure that is brought over to the balance sheet here on the inventory.
Yeah.
So we do all that crap to come to have this figure for the balance sheet. So we messed that up, the balance sheet will be inaccurate, correct?
Very true.
Oh, yeah, huh?
Okay,
But just to be clear, right? Didn't we learn that different methods can bring slightly different amounts?
of
Oh,
course.
okay.
No, and whatever that different amount is, once you determine what the ending inventory is, then that's the figure you bring over to the balance
Oh,
sheet.
it's different gross margin. Sorry.
It's different gross margin, different cost of goods sold, depending on the method.
Different gross margin and different net income.
Yeah, but not ending inventory.
Okay.
Oh, inventory always the same. Mhm.
Yeah,
Cool.
ending inventory will be ending inventory. It's not affected by FIFO or LIFO. Gross
I believe
margin
you are just
and net profits, etc., cost of goods sold. Yeah. Okay.
probably
Alright.
saving 4 points just now.
Just
Maybe
like
5.
that. That's why it's so important to ask questions. Okay. All right. Let's see. Estimating receivables. Estimating uncollectible accounts. Of course, estimating is estimating. It's not an exact science. Actually, we're told that one of the first methods of estimating uncollectible accounts. Remember that 12,000? That was a figure that management pulled out from somewhere from based on experience, but we don't always pull it out from somewhere based on experience. We use two methods of estimating uncollectible accounts that are popular. One is called the percentage of sales method, and the other one is called what? Anyone? It's down somewhere. Anybody read that far?
Accounts receivable
Aging
aging
method.
method.
Yeah, the accounts receivable aging method. So let's look at the first method to estimate uncollectibles. The same one that Mario is talking about is 12,000. What percentage is that? He just had to get it to a percentage at all costs, which is a good thing, by the way. All right, so how do we use the percentage of net sales? Let's see. Does anybody understand what's in these general ledger accounts?
I'm guessing they're gonna like add up. Yeah, but that would be wrong.
Well, what are the total sales?
Total sales are 322,500.
Sales returns, would they reduce sales?
They would. Sales returns. That's the stuff they buy, but they bring it back. Yeah, it would. It would.
It
I
would.
believe
By
it
how
would.
much? It would. By how
By
much?
20,000.
Sales discounts, would they reduce sales?
They would as well.
They would. By how much?
By an additional 2,500.
Absolutely. So what would be net sales for this particular business?
300,000 flat.
How do you know?
That's how much 22,500 is less that's how much 322,500 is less 22,500.
So which brand calculator did you use to do that?
My brain.
I thought so. Isn't
But
it
it's
one?
this little allowance for is that something that has to be deducted from sales as well, or that's like the margin, like that's how much they like allowing them?
Well, you know what really stinks, Mario? I was
I'm
in the
listening.
process of complimenting you for doing a little mental math, something that people don't do anymore. And you rushed over to the allowance for doubtful uncollectible accounts. But you still didn't get that compliment, I see. That's,
I appreciate it. I appreciate it, but I know the job being done. You know.
I know. let me tell you the real reason. The real reason why I like it, because guys are not accustomed to being complimented on anything anymore.
No, I'm not.
What the hell is what? Are you freaking serious? Because we're so busy, we don't compliment guys for anything anymore. No matter what, for some strange reason. Okay. All right. So, yeah. So this allowance for uncollectible accounts, did that show up? Didn't we do the allowance thing earlier? Method?
I'm sure we did.
So in this balance is the credit balance that's showing up in the allowance for doubtful account, which means that the debit side of that would be equal to how much? We just did the entry.
The same thing. The
How much?
1800.
Yeah, 1800, because we debited uncollectible and credit allowance, correct?
So boom. So what I think you get now is with the net sales of 300,000 flat, out of that, they are expecting to not collect 1800.
Well, let's see if that theory has any truth to it. Let's go down a little further. Okay,
I think that's what you get now. 300.
look at 2009, 10, and 11. And look at the net sales for each of those years. And then the losses from uncollectible accounts for each of those years. And then the percentage that has been allocated for each of those years. Now, over 3 years, the estimated percentage of losses is equal to what percent?
1.96, and then 2.34, then 1.69, then 2 flat.
So over 3 years, the estimated percentage of losses would be equal to roughly what?
Let me see. I got to use a calculator for that one. Plus 2.34 plus 1.69 plus 2. Oh, crap. Plus 2 equals
Would that
that.
be 2? Or what are we doing? We're adding and getting an average or what?
Approximately 1%. Unless I'm wrong.
Well, what is percentage loss estimated for 2009?
Oh, 2%. It tells us 2%.
Now you spot it.
Good.
Thanks,
Okay.
sorry. Yeah, 2%.
So what is 2% of the total net sales over 3 years?
70. It should be 70,000, eh?
I don't know, is it?
It's telling me calculate. Okay.
That's exactly right.
Yes, you're right. 170.
17.
It's powerful.
17,000.
What is the losses from uncollectible accounts in 2010?
6,950.
That represents what percent?
2.34.
Okay, so I think you guys are beginning to get the picture. You see, this is how management comes up with its estimate. So they go back and use 3 years of net sales, average the uncollectibles for the past 3 years, work out the percentage for the past 3 years, and then come up with the percentage for the current year.
Boom. And then
Which
take
is
that percentage.
Yeah, they take the percentage for the current over 3 years, multiply by those
100.
sales minus
Sorry, net sales, yeah. Wow.
discounts and allowances, right?
Mhm.
Which equals the 300,000 you came up with times 2%.
Which is $6,000.
And so that 6,000 then becomes what? The uncollectible accounts expense estimate. And so to answer your question earlier, like how do we come up with this stuff? This is how we come up, we make it up out of the blue, or we use the percentage of sales method. See?
I wonder what the aging method is.
Sorry?
I wonder what the aging method is.
Oh, so that means you're comfortable with the percentage of sales method.
I would say so.
Okay. And since I don't hear anything coming from your colleagues, I'll
Yeah,
let you-
I was just gonna say I'm the only one in the class.
I'm right
No.
here listening.
Notice what happens once we determine that the uncollectible amount is $6,000 based on those 3 years of history, when we do our posting, what happens to the allowance account? Does it increase or decrease?
It increases.
And what happens to the uncollectible accounts expense?
It decreases. It increases also.
Absolutely. Welcome to
I
the
guess it's about the
analytical
same.
world of accounting. It increases also. Okay?
Mario,
Isn't magic to
good,
this?
good.
I try and I
There's
try.
no- Yeah, you're doing a pretty good job jumping in for Hadith and what the hell? Where's Crystal?
Crystal,
So
Crystal,
good
you
morning.
I'm here. I'm on I-95.
Okay. Yes, we have to keep checking for Crystal. She always
I
taking
stop off by number one, walk to that Chinese place on Sterling Road.
Hey.
Oh my goodness. We have to keep track of these chicks, Mario. Where's Clinton anyway?
I believe he's there. I would like to believe that he's spectating.
I'm right here, spectating.
Clinton
See
is
that?
right there.
All right, everybody else.
Danya, where's Danya? Kiss my foot.
Right
Danya.
there.
Oh, there you are. Okay. I have to take inventory. Should I use FIFO or LIFO?
I think you should use Fifo.
Voice in, voice out. Use 5 because I was the voice in. Let me be the voice out.
Okay. Denise has still has mic issues. Is Denise still online? Denise.
Chat. I sure she say something to chat.
Denise then go on.
So she went from
Sorry, Denise. But she going.
I
she
sure.
threw Denise under the bus. Okay. So we'll look.
Urbanique and Blaine is here.
No way.
I'm here. Yes, wait.
Urbanique, who?
Miller.
That's you, Urbanique?
I am here.
Yes,
All this time?
Crystal, don't laugh. I saw them in here when we was talking, but
Follow
figured-
on.
I forgot I wouldn't put them on blast.
7,
Boy,
8,
tell ya.
9, 10, 11. Urbanique, were you here last week?
I was.
You were?
I was.
Okie dokie. So I need to take Urbanique as being here now. I had you absent to the bone.
See there? Thank God I
I
told
was here.
Seriously. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Urbanique is here. Okay. It's a good thing Hadith said that, Urbanique.
Thanks, honey.
you're welcome,
She's
darling.
been so quiet, like she's like all mousy all evening, not a word. Like, I'll just sit over here and hope they don't call my name. All right. The final thing we'll look at for the day, and then we'll break.
Hold on, pause.
I'm just looking down to see how far this madness goes.
Oh, so I'd really like to explain that.
Okay.
30 days.
So-
60
So
days.
we're not gonna be finished with all of it tonight, because we have this stinky notes receivable next week. But anyway, all right, so let's go back to the. Yeah. Aging of
Yes.
accounts receivable.
Can you run over this briefly?
Yeah, we're gonna do that and then we're gonna break, okay? For those of you who haven't read this chapter yet, please read it. And then the final chapter that we're going to look at in my text is chapter 10. What is in your text?
I guess chapter 10 also, eh?
Receivables.
Let me see what 10 is in my
Chapter
text.
10 is long-term assets for us.
Let me see what it is in my text.
Chapter 9 is receivables for us. Notes receivables, account receivables, disclosure of receivables.
I'll tell you right now.
Chapter 9.
Checking my chapter 10 to see what comes up. Oh yeah, chapter 10 is for me is current liabilities. Fair value accounting. What is chapter 10 for you guys?
I think it's long-term assets. Yeah, long-term assets, wow.
Your chapter 10 is R11.
Oh,
I need, let me, okay, let me see what my chapter 11 is.
yeah, we
So
might as well break right
I'd
here.
rather do long-term assets before I do liabilities. Liabilities you pick up in part 2.
Okay.
Yeah, that makes sense.
God bless your heart.
Or rather none. But Mr. Wilkinson,
I
I think you should have mute. I don't think you.
you know, I had to come in and die for that because when is exam again? I just look at my calendar.
After next.
19.
You know, because I mean, I understand we have a syllabus to go by, right? But we
Yeah.
have to study and factor in all of this, and then you like to give us homework on the week before the exam for study, you know, practicing and whatever. So
Practice,
Practice
yeah.
on my own. Maybe good, man.
Well, here's what's gonna happen. Next week, we'll only have a couple little nitbits to look at for the end of chapter 9. And then we'll do your chapter 10, which is long-term assets, which is my chapter 11. Okay? And wherever we get there, we'll quit. I think there's long-term assets, wherever we get to would be a good place to end it, so that you don't have to, you know,
Hurt your brain too much.
well, I want you to hurt a little bit, but within reason. No pain?
I'm trying to teach us that stuff. Like, come on.
Okay, so we're back to Mario's thing. Where were we?
It's a table, the analysis
Yeah,
of
right, there we go, the accounts receivable aging table.
Yeah.
All right,
Please
so,
explain.
so let's look at this table for a few moments, and then we can all go and have a normal life for tonight. But you guys shouldn't have a normal life until April the 20th. Or April the 19th, 9 o'clock. Sorry. Because that's when students should have a normal life after the final exam, not a day before. All right. So this aging accounts receivable schedule is very popular. It's done oftentimes electronically these days, but you can actually do it manually as well. If you're a small business and you don't have all that electronic mumbo jumbo, you can go to Excel, and Excel will still do a great job for something if you're a small business. Okay, so what is this schedule designed to do? It's designed to show management not only the total amount that is due to be collected, but how old the accounts are. Okay, for example, in this particular schedule, the total amount in arrears is how much? Anyone? Sorry, not in arrears. The total amount of receivables is how much?
88.8 thousand.
Yeah, 88,800. Okay, so that's your total receivables. Now, if we go to Mr. Wu from China, how much does he owe?
300.
$300, and he's past due for what period?
30
30 days.
between
1 to
30
2
day cycle, 1 to 30 days.
Yeah,
Wow.
he's in the 1 to 30 day cycle. So 1 to 30 day cycle is usually not a critical cycle. Okay,
No.
we want persons to be in the current cycle, which is not yet due. But 1 to 30 days isn't too bad. They're 1, 5, 7, 10, 15, 20, whatever days. Generally, they come in and pay. Okay, we don't worry too much about them. Miss or Mr. List, though, is owing how much money?
$800.
800. He owes more than Mr. Wu, and for a longer period of time. He's in the 31 to 60 days. Things are getting a little scratchy there. Once you start getting into past 60, things start to get a little more difficult from the collection side. Okay? But this aging table will show you that. So you can track it. Okay? If you're management, every week you tell them print that bloody report. Because you want to see if any payments are being made, anybody went past due, anybody went further past due than the week before. All right, what about Smith? What about Mr. Smith? Smith owes 2,000. How much of it is not yet due?
1,800.
Yeah, but there's an amount that is due,
200.
$200 within the 1 to 30 day schedule. So that's not a problem for Mr. Smith. We wouldn't worry about him. We wouldn't fall asleep completely, but we wouldn't worry about him yet. Now things start to get funny with Mr. Vigo. Vigo owes 500. Has he paid anything yet?
He hasn't.
Not only has
60
he not
days.
paid, he's not in the not yet, 1 to 30, nor 61 to 60, 31 to 60. He's in the what? Danger
61 to
zone.
90.
Yeah, the danger zone. 61 to 90 days. If the company doesn't do something quickly and get Mr. Vigo in, chances are that's going to become an uncollectible account. Remember that?
Two.
Because Vigo looks like he's making it his business not to pay. True or false?
Sad look on paper.
Well, that's what the paper means. That's why we call it aging receivables account schedule. Okay. Now, the problem is everybody else. What are they doing? Well, half of the persons are not yet due. That's a good sign. But $28,000 is in 1 to 30 days. That's not terrible, but that's getting spooky. 7,600, that's not a whole lot, but it's still a lot of money in the 31 to 60 days. 4,400 is in the 61 to 90 days of others. And then, God forbid, there's a little small Junkanoo gang over 90 days. Anything over 90 days is a big problem, even with the banks. If you have a mortgage and it goes over 90 days, they start coming and throwing you out your house.
Good.
You and everybody else, including the dog, the cat, and the goldfish.
It's very insensitive.
I know. A Bahamian banker might give you a break for a little while, but if you go in places like the United States and Canada and Europe and those places, they don't give you any breaks. They come with the cops, the defense force, and whoever they need, and bodily remove you if necessary. If you don't want to, some people, they don't want to leave. They start fighting even, or some will have weapons and start shooting. So even going get people out of their house could be risky if they put on life vests, because some people in the house might have a gun. Believe it or not. Look at the nut in Sacramento yesterday, wasn't it?
I don't
Wasn't
know.
it? You guys heard about Sacramento?
They've just been focusing on a potential peace treaty. That's still in the works. That's
Yeah.
about it.
Anybody heard about what happened in Sacramento?
I'm the mass shooting.
Yeah, thank you very much.
Another one?
Another one. How many people
Gosh.
died? How many people died?
6 people died, 12 people injured.
Yeah, 6 people dead, primarily young people, and 12 are in hospital, some seriously injured.
Any of them blocked?
Any black Clinton?
No, they didn't stay, Grace.
They didn't say,
No, sir.
fortunately, because
I just want this peace treaty to happen so gas could go down and
You know what I was thinking about? What if it don't go down
markets.
as fast as we would like it to?
Bahamian businesses, they
Well,
don't come back down.
Well, what is interesting is, I was thinking Clinton was about to say he wants the treaty to happen so they can stop mass murdering innocent people. But actually, he's thinking more of his pocketbook. He said, man, I need this gas bill to go down. And you're not alone. A lot of people around the world are feeling that way. The devil with the people in Ukraine. Just stop fighting so the gas bill can go down.
My disposable income just keep depleting after every time inflation come around.
So if you have any outstanding credit, you might end up in the 90 days and over at this rate.
At this point. So all I can do is invest everything right now and just, try to eat some tuna and white rice and cotton.
You rich? You getting tuna? People eating corned beef? You rich? You still rich?
I still like corned beef though. The reason why I like corned beef is because the way my wife cooks corned beef is like a delicacy.
Oh yeah, with the potatoes inside, right?
Sorry?
the potatoes cut up inside of it, right?
Definitely.
Yes, sir.
Oh yeah, put corned beef and potatoes, and then she adds some extra special, some crap that makes it taste like a delicacy, better than caviar even.
Yeah,
So yeah, and then on the side of that, like white rice with freaking macaroni or potato salad, man, that's a Sunday dinner for me.
Ain't no shame with him. We can eat the corned beef, now we can eat the sushi, but we can eat this corned beef, a little bit longer than you get the sushi. You know what I mean?
Absolutely, and it's cheaper. And that sushi is that little stinky fish or something.
Yes, sir.
And they charge you a lot of money for two little puny pieces of whatever, and that may not even be real fish. Okay, all right.
Ladies are
Now
quiet.
we're not. Well, we're almost done with this schedule, but we're not quite done. But you know what? You guys have been more than amazing. Let's just let that aging schedule simmer for now. When we come back next time, we'll finish up beginning here with how we allocate the uncollectible percentages, apply them to each of the aging schedules, and figure out what the actual uncollectible amounts are for a particular period. But we'll do that when we come back next Monday, and then we'll finish that, finish the chapter, go as far as we're going to go in chapter 10. I already have the schedule. It won't be the whole of chapter 10 up to a certain point, and then I will leave you guys to go off and get ready for your final examinations, which of course you should be preparing for since the midterm ended anyway. How's that? But nevertheless, for those of you who are just getting started, you still have all of this week, the weekend coming, all of next week, the holiday weekend, so all is not lost. Please do not take your time for granted. Use it wisely. Study when you're fresh and not tired. Do a little bit each day. Do a lot more on the weekends. Do a lot more during the holiday weekend. And if you do all of that and you haven't been doing anything at all up to this point, there's no way you can go wrong. Okay? No matter what curveball I throw. How's that? It's easy for you to say. All right. Any questions before we break? Okay, wonderful. You guys have a great and safe week, and I'll see you on Monday.
Good evening.
Yeah, on Monday. All right.
Okay,
But
good night.
remember, if you're doing any practice sessions and you get stuck, you can always drop me an email and say, I'm stuck on this point. Why is it that this LIFO thing still doesn't work, or whatever the case might be? Feel free to do that. The other thing is, I'm hoping that everybody has submitted their homework, the second set of homework that I assigned. Is anybody who has not submitted? If you have not submitted and you don't want to say so publicly, please go ahead and finish the homework and send it to me as quickly as you can. Remember, you get credit for that homework as well as practice. That's the whole idea. Plus, if you run into something that looks a little spooky, you can make a note, send me an email, raise it in class next week, all that good stuff. So go ahead and do it if you haven't done that. All right, until then, have a safe week, and I'll see you guys in 7 days.
All right, good
Good night.
night.
Good night.
Good night, good night.